having dreams so big that they'll haunt you, or they'll calm you. That's how you know if you gotta go and get to win and not conquer. I had to go out and get it without a sponsor. Kept it real, never crooked, yeah, that's honor. Now I can go out and get it how I want to. Hashtag bless, I choose.
What is up, Rumble? What is up, YouTube? Welcome back to the Ryan Matta Show. I'm your host, Ryan Matta. Thank you so much for joining us today. We already got a live chat. We got Peter, Dan down under, Mohammed in the house. Great to see everybody on this beautiful Tuesday evening. I got a special guest. We're going to do a deep dive into Bitcoin and Harmonics. My guest, Craig, is on the Pete Santilli Show. Shouldn't say the Pete Santilli Show. Pete Santilli and Craig do a show in the morning called Market Ultra over on LFATV. So if you guys haven't been to one of his episodes, I just shared a link to it. It's down in the description of this video. Swing over there. And if you guys are looking to get your daily dose of the markets, a little bit of political news back and forth, this show is absolutely off the hook. They do it every morning, Monday through Friday from 7 a.m. to 9 p.m. And me and a couple of fellow Bitcoiners are actually going to be hosting morning markets tomorrow for Pete and Craig. I would say Craig's last name, but I'm going to let Craig say it because I slaughter it every time I try. Craig, welcome to the show, buddy. How you doing?
Great, Ryan. Thanks for having me. This is great. So
how
it's
do
Craig
we say your last name?
Yeah, Wenclewicz.
Wenclewicz. Oh man,
Yeah.
I mess that one up every time. Great to have you on the show, buddy. Man, I'm so excited. Me and Craig were just talking right before we went on today. And Craig said by the end of this episode, you're never going to look at the Bitcoin daily time frame, the chart for Bitcoin, the same after today's show. So I'm super excited about it. We were having a little conversation right before we got started about the dollar and what we think is going to happen with hyperinflation. Craig, you said you have a little bit of a different take on it. So can you give us a little background on your history, who you are, and then feel free to take the mic and run right into what we were talking about the dollar.
Yeah. So I've been in the markets for at least 30 years. And so I figure, I probably work about 4,000 or I'd say about 4,000 hours a year. So it puts me well over 100,000 hours in the markets. And so I've done all the things, went to graduate school to learn, what I thought would be a good way to learn more about the markets. And it's actually exactly the opposite. I found out, that kind of what I always thought, that graduate school was pretty much just a waste. And I can say that because, I put all the effort into it and none of it really applies. And we live in this world, right, Ryan, and everyone where, you think you see the truth and yet nothing ever comes of it. Right. And so, we see all these metrics that they put out there, we could go through the years, right. All these different ways that they do the accounting methods or the, different metrics on price to earnings or price to book or, EBITDA, EBIT, you see all these different things and how they value companies. And you realize that they just change it as they need it. Right. So for a little while, 20 PE is fine. And then all of a sudden a 25 PE is fine on this company and 18, so they just, you guys know what I'm talking about, right? It just always seems so, it's always seems so, phony, really. I mean, that's the best way to put it. So, a long time ago, I was fortunate to work out of graduate school. I actually went down to a firm down in Florida called Ned Davis Research, and we were strategists for a lot of hedge funds. And so it was great because get hedge funds would call in with an idea, and we had this huge, rich database of data, probably one of the best in the world at the time. I can't speak for them now because I've been away from there for a while, but at the time we were probably one of the richest databases of data. So hedge funds would say, "Hey, I've got this idea. Can you whip this up for me?" And so we did, and then we do these individual studies, and then we give them the feedback on it, and then we started building asset allocation models for them, right? So they would know, like, how much gold to put in a portfolio, how much value, how much, all these different things. And then after that, it just wasn't enough. I mean, it wasn't really satisfying me. It was turning more into a coding job than it was a trading job. And I kind of wanted to be more involved in the market. So I went up to Chicago and worked for a firm. It was right when the Chicago Mercantile Exchange was going from, being kind of a privately, run enterprise where it was a closed knit operation, right, to this big open operation where, they went public, right, and the CME stock went public. And so there was a big scramble at the time, all these people had seats on the floor, and then they not only did they get to keep their seat, but then they got shares that went with it. And so some of these guys just checked out because they were making just a fortune, right? They got hundreds of shares in the CME. The CME stock went to $400 a share. So they were checking out. Well, I wasn't that fortunate. I was there working hard in the short end of the yield curve, which is called the Eurodollar market, making markets and trading these complicated things, butterflies, condors, and then these packs, bundles, and strips, all these different things. If you want, we get into, but it's kind of just, basically it's just a bank would call in and say, we need this product. Can you sell it to us? And then we would, and then we'd have to spread it off and basically, de-risk it and then hold it on our book. And then, we build this book over time. And so, we'd build these massive books up and try to slowly sell it off or, turn it into other types of things that we thought would do well based on where the yield curve is going and so forth. So anyway, so I did that. And, I watched our firm, we had a bunch of, young kids in there who were right out of, all these Ivy League schools and stuff. And I was a little bit older at the time. I went back to graduate school and I was a little bit older. And so by the time I got there, I was a little bit older than a lot of the kids working in there. So I had a little bit of wisdom and I just watched what went on. And, you'd see these guys all end up on the same side of the trade, right? And you'd see the boat, everybody leaning on one side of the boat. And, and the firm almost bellied up a couple times. And, we'd shut down for 2 or 3 days. They'd go back and evaluate the books and see where we were at. And it was pretty wild sometimes. It was like the Wild West. And then, so then they asked me to start developing some stuff for them to try to help keep them out of trouble. So I did. And then when I got into that, I was like, then I was working late at the office, on our trading floor. And so I met a couple people and it was pretty cool. It's fun because Chicago is really a mecca. At the time, this is probably about 2004, 2005. And so Chicago was a real mecca for trading. So you'd meet some just totally interesting characters and people that, were just different, right? I mean, just weird individuals. And so I'd meet them because I was there all hours of the night. And so I met this one guy we called Crazy Larry. And he had worked with a trader, a Swiss franc trader, who ended up buying a big chunk of Turks and Caicos. He made so much money trading for some global elites, mostly some Swiss domiciled entities. So probably nefarious, dirty money more than likely, right? Probably. So anyway, just to wrap this up is, I met him and took some of my ideas that I had acquired from when I was working down at Davis Research, took some ideas that I had acquired on my own, took some ideas from Crazy Larry, some other characters, and I started looking at things a lot differently. And I came up with what at the time, I didn't know that it was harmonics, right? I just knew that when a market, I'd get this zone where a market would kind of form a range. And once it would break outside of there, I knew I had a pretty good chance going up to this green line, right? I'd demarcate the target with a green line. And then I was kind of giving this to some of my buddies on the floor, and I was giving it to them in the grain markets and some people in the treasury markets and some people in the currency markets and people in the metals markets. And they were saying, hey, dude, this, check this out, man. So I was actually learning from them, right? By giving them all this output, and they loved it, right? They were getting my research, and then they were helping me. They'd say, hey, it kind of seems to have stops here at the halfway level. And I was like, well, that's interesting. So then I started studying that. And then I said, well, if it stops at the halfway, what about the quarter points? Right. Well, it did. So I was like, what about the 8 points? And it did. So then I started to realize, what do I have here? You know what I mean? So then it's kind of fascinating how I backed into it. But then once I figured that out, then I spent, probably the next 5 to 7 years really trying to blow it out and put it together on 30,000 different stocks around the world, just to see if it was, if it worked on everything, and for the most part it did. I mean, it was great because it didn't matter. I could throw it on a symbol. So to come full circle, where it was is I started off, thinking price to earnings or, price to book or these metrics were valuable. And then in the end, I come full circle and I prove that they're not, and so the harmonics and that's what we try to do on Market Ultra is we try to take these harmonic levels and then we look at things completely different. We go into it with this idea of the harmonics give us this structure. And then we come back and we take the news and we try to apply the news back to the harmonics, because what you're looking for is you get this zone where the energy builds up and then you get a breakout to the upside or downside. And then all you have to do is pay attention to the news, right? And the better you are at that, the better off. Because for instance, right, when Hamas attacked Israel, right, everybody thought crude oil was going to go through the roof. And I had a harmonic structure in there. And And so, sometime if I come back on, I'll bring it. It's like a 5-minute video, and it shows us going through the progression of it for 3 months, right? Every day working
Mhm.
through the crude oil market. And I was like, I don't think it's going up, Pete. I think it's going to go down, right? So it did, and it hit our harmonic, and it stayed, and it went back up and retested this 79.37 level per barrel, $79.37 multiple times. So it broke through, and when it broke through, I said, Pete, I think this thing's going to blow through when it blows through, just the way it's trading. It blew through that 79.37, and then it's been down there for 4 months now, 3 to 4 months, just bouncing up against that 79.37 until about 2 or 3 days ago where it went through. So what it does, Ryan, is it gives us the ability to really look at markets, not by fear, right? Not by greed, right? But by
Mhm.
what I think is the truth. And then we take the news and apply it back, and then we observe what's going on and see how the market's trading around these levels. And it gives us a really different perspective, what I call arriving at the truth.
How long does it take you to build out? Like, say, like I know we had talked about Bitcoin for a while, and you're like, "Hey, man, I gotta do a lot of cool stuff. I gotta build this out. I'm working on this." Are you taking data from like trading view? And then like I watched another guy's video last week where he was like actually like say you use like the RSI indicator. Well, that indicator is mapping out data points. He like extracts those and puts them into like an Excel spreadsheet and like does some stuff with them, and he gets more data sets, and he puts that in. Are you using like really complicated data sets like this, or can you explain that how this works a little bit?
Yeah. So what I do is I collect data. So I do it on different time frames, right? So I'm a believer in fractals. And tonight, when we look at symmetry in the Bitcoin market, hopefully, when you see this, we're just going to start with a pure blank chart, just price action, and then hopefully by the end, you're going to look at this and say, "Wow, I had no idea." And what it'll do is it'll give us a little bit of a taste into what symmetry is, basically the tip of the spear for what harmonics are. And we won't be looking at expansion and contraction and these different things, but it'll give you a kind of a sense of what we're trying to do here. So what I do is when I build this out, I collect data on, I think about 70 futures markets, maybe about 40 or 50 Forex markets, ETFs, and then just a huge grouping of stocks, right? And they're all broken
Mhm.
up by different sectors and sub industries and different things like that, because what that can do is there's a correlation between crude oil and a lot of the different, energy, whether it's a producer or a refiner or and, someone who's, basically selling the gas at the pump, right? So we've got
Mhm.
this whole chain of the crude oil market, but we can watch the crude oil market. We can watch the sector as a whole. We can watch the sub industry. So we can look at different sub industries under the energy sector. And then we can look at individual stocks. And when we look at all these things together, it's sort of like a web, right? We're taking
Mhm.
all these different webs of lines of harmonics, and we're overlaying them against each other. So what will happen is we can actually start to initially we'll get the signal in crude oil, then we'll look at all these little sub industries and sectors, and we'll say, well, which one seems to be leading the pack, and is it to the upside or the downside in crude? So there's a lot of different ways of going at this, and so when you say collecting the data, yeah, I collect just an immense amount of data, and
Mhm.
then push it through SQL. So we use SQL because SQL's a really solid platform. And then what it does is we run. And then what I was going to say is we look at fractals. So we look at 4 hourly, 4 hour, daily, weekly, monthly. And then I've broken it down into a whole different subset of time frames too, where we just use more of a volume. So we do like, 8 ticks, 40 ticks, 200 ticks, all in increments of 5, because mathematically we can connect all the time frames and do some pretty cool stuff there.
Mhm.
So not to get too far off in the weeds on that, that's stuff
No,
for
that's
other
great.
topics, for other days, but hopefully that gives you a little bit of an idea.
Yeah, man, absolutely it does. Will it be easier for me just to let you share your screen and kind of me ask questions as we go, or would you like to explain a little bit more before we get into it?
I think we can just dive in, and then you can ask questions. I don't know if you have contact with the audience or not, and if they have questions or not. If you can,
Yeah, I
do you
do, man. I got the charts over here, so I'll be keeping in contact with them. If they want to drop some questions in here, we'll ask as we kind of go and do a little learning session. Man, I'm so excited. This is probably the interview that I've been most excited about. And we had it scheduled out, and I sent Craig my Calendly link when when we had first decided to do this. Well, we are actually going to do it a couple weeks ago, but Craig wanted to get some stuff together, so I was like, okay, cool, take your time, no rush. And I was looking today and I'm like, man, I could have swore I had an interview tonight, and I guess I sent it to Craig and Craig's like, yeah, Tuesday works great. And I was like, okay, cool. He didn't book it. I didn't check to see if he booked it. And I was looking at the thing and I just got a text message from Craig and I'm like, oh crap, man, I knew I had an interview tonight. So yeah, that's how that went. And here we are. So you should be able to share that, share your screen. Let me know if you can.
How's that work out for you? Because all
Yeah,
I'm
that
seeing,
works.
I'm seeing your thumbnail, and I just see my output up in the upper right. Is that good?
Yeah, yep. You're showing on the screen here right now and you're good to go.
Okay, so that we're solid.
Yes, absolutely, sir.
Okay, good. All right. So what we're going to do here. So this is Bitcoin, and it's going back. Let me get my mouse here. So this is the Bitcoin futures market, right? And we're going to look at the futures market just because, well, because I look at the futures market because how do I put this? So what I like to do is hold the physical crypto, hold the physical Bitcoin, and
Yep.
then for every 5 that I hold, the futures market pairs up nicely with that. So essentially, I can kind of keep Bitcoin off the grid, and I can still hedge it in the futures market. If that makes sense. Does that
Yep.
make sense? Okay.
Yeah, say
So
that one more time, just so I want to make sure I fully wrap. You said you hold physical Bitcoin,
right.
but
Well, let's call it physical. I think of like everything is if you hold the actual asset, I
yep.
call that physical, if that makes
Okay,
sense. So if
yep.
I'm actually holding the physical gold, then
Yep.
right. Okay. So you hold that physical Bitcoin, but then you use the futures market to trade around that physical, right? So for instance, if you hold 10 Bitcoin, right,
Yep.
and you use 2 contracts to offset it. So I can go neutral within seconds. So if all of a sudden I get a signal, I can neutralize my physical in 2 seconds with the futures market, right? By selling 2 futures contracts in Bitcoin,
Yep.
right? If I want to load up and I want to get 20 Bitcoin, right, I can
Mhm.
buy 2 contracts. And then what I try to do is if I buy 2 or 3 or 4 contracts of Bitcoin, then what I can do is slowly sell a little bit off, take profits on a couple of them, leave a little bit of additional. So I can essentially, if I think of 5 as my base unit. So let's just say 5 Bitcoin is my base unit. Then I have 2 base units of physical, and I can use the futures market to pick up a 3rd base unit of Bitcoin exposure. Does that make
Yep.
sense?
Yep.
And I could pick up 4th or a 5th. And so then what I'll do is, try to, at the end of day, I'll either, liquidate my futures contract. That way I don't have to, deal with the margin on it at night. Cause I don't know I'm not exactly sure what it's at right now, but for a long time, Bitcoin was pretty pricey on a margin perspective. But, the, what I would do is, try to go in. Sometimes I just go in neutral. Like if I'm real sketchy on what I think Bitcoin's going to do, I'll just sell 2 futures contracts, and that way I still hold the physical, but I'm net neutral. So where the day closes, it's where it opens up for me the next day. I'll take the shorts off, the 2 short contracts off. Then I'm long again, and then I can get long more. Does that make sense?
Yep. 100%.
Okay, good, great. So, all right. So let's just dig in here. Let's just do. Let me just take two big ones in here, right? So we've got these 2 big swings here, right? This big move up. We have this retracement here. We have another big move up, another retracement. So this is around, just so you have a perspective, this high right here is the April of 21
Yep.
high right there. This is the July of 21 low. This is the November of 21 high. Okay.
Yep.
So let's just start digging in here. So what I'm going to do is I'm just going to strike a high from this peak right here, and I'm going to come down here, and I'm going to set it on the low. Okay.
Yep.
Then I'm going to come over here, and I'm going to put this so this green is the exact same size as the black, right? So I'm going to slide up here, and I'm going to put it on that high up here, right, which is that November 21 high. And you can see right here, it marks the low on this swing right here.
Yep.
See that? So what I'm going to do is I'm going to come in here real quick, and I'm going to mark this for us. So let's just go ahead because it's going to we're going to get a lot of stuff on here. So I'm just going to go ahead and create these. You'll see what I'm going to do. I'm going to mark these in black just so we can get rid of these because we're going to need to use this. And I use CQG as my charting platform just in case someone's curious.
Yeah, I see you got a whole bunch of cool features on here.
Okay. All right. So now we've got those two marked. Okay. So those are what we call symmetric moves. All right. The same size. So we'll just mark those right there. Okay. So now we've started to put a little bit of something on this chart. So now let's go back here and we'll say, let's take this first big move up right here. We'll do the same thing. Okay. So we'll take this high right in here. Okay. We'll come down here to this. All right, now what we're going to do is we're going to go hunting here. We're going to start looking. So we're going to see here, we've got almost actually a really good symmetric move right here. Do you see that high and low that I'm grabbing?
Do.
Okay, then we're going to go up here and we're going to see, look at that. We got it. This one's not quite, but it's pretty close, right? We go to this high right up here and we have this low right there.
Yes,
okay,
sir.
Okay, so then what we're going to do is we're going to take another peek, right? We're going to go in here and we're going to say, I think maybe I covered one of them up here. I cover that up. Yeah. Anyway, we'll come back to that one. And then let's go down here. We'll take a look at this. So this isn't too far off. This one down in here. We've got this one right here is really nice. See that one?
Yeah.
Right. And then we're going to go up here and we'll come back and we'll start marking these. I just want to see if we've got some hits here. Okay. So it looks like we do here too. You can see right down here at the bottom of this, there's a hesitation. I wouldn't call it if you think in terms Elliott wave, I'm not sure that we would register a 1 down with a 2 up right here. Kind of hidden behind this black, but there is a hesitation there. Do you see all those sideways lines?
Oh yeah. I marked that out as an Elliott wave one time when I was charting, so I know exactly what you're looking at there.
Yeah. If I blow it out a little bit, you can kind of see that hesitation there, right? So there we are. Okay. So you can see we got something there. And then we can come down here and we can look at, if we come off of, yeah, I think I've covered something up here. I tell you what, I'm going to move this. This is kind of important. Let me slide this over here. I'm going to change this. All right, let me restrike this thing where it's not going to get in our way. I'll get this one off here. Okay. Yeah, we were missing some good stuff there. All right. Okay. All right, now moving on. So let's go back and let's grab this thing again. And we'll go keep searching. All right, so we're back to this guy. So this is our first big, and this is a pretty significant impulsive move, right? And so we get this impulsive move, we get our first retracement here. So we'd like to look at that, right? See if that establishes some symmetry. So we got it there, right? Just kind of doubling back. We had it here, right? We get a little bit there. Come down in here. We probably have something in here too. Definitely have something there, right? And then we come over here and we say, oh, look at that. We've got, not bad. We do pierce it right there with that spike low, but we've got something there. And then we come over in here and we'll come back and we'll mark all these so we can see. But I'm just kind of hunting, see if we've got something. Oh, there's a nice one, right? That low to that high. See that? So we've got another one right there. And then we come over here and we've got, let's see. This is a nice one down here. See that high down to that low? Right? And then if we come over here, we've got, okay, so we've got that low to that high, kind of pierces it right there, something. And then let's come over here real quick and see if we've got something. So there we've got another one. And look at this. We've got another one right there. See that?
Big time.
So we've got a lot of stuff. So what we'll do is let's go back. Let's work with this, right? So we've definitely got something in terms of symmetry here. All right. So let's, so we know that this one's good. So let's go ahead and mark this one. Okay, we got that one. And then let's do this guy here. Okay, and I think you can tell me too, Ryan, which ones you're good with. Are you good with that one right there down to this?
Absolutely. Yeah, both of those. Yep, for sure.
Okay, because I would call this an Elliott wave, right? We got it down, down one, and then this kind of sideways upward two. So that kind of fits, right? Impulsive move down, especially with that gap right there. I like that gap, right? That's pretty impulsive. So let's go ahead and mark that one. Mark this one from here down to here. Okay. And then we had another one here. I think I can mark this, and we'll come back and double check it, but I think we can mark this one. we'll double check that. And I think we were pretty good with this one too, right?
Yes, sir. Yep, definitely that one. And then, yep.
We'll come back and validate these just so people don't think we're throwing lines on here.
Mhm.
And then I think we were good with, what else did we see here? Was it this one?
I believe so. Yeah, I think it was that one going up because we counted the spike down there.
From here down, from here up?
Up, yeah, from there up, yep.
Okay, we'll
Or
come
it was
back.
the one to the one to the right of that, from that right spike to the next top up there. Yeah, it
This
might
one
have
up
been to
here?
that one. Yeah, I think that was it. But
Yeah, I'd like that one if that one's accurate. Let me get rid of this just so we can see that bottom there.
Yep.
There we go. That's a little bit more clean. Now you can see
Mhm.
that, actually see the spike low.
Yep.
And then I think we had one from, was it here to here? I think. But let's go back and check these. Let's see if we've got them
Yep.
right. And let's for sure mark this one because this is the one that we're
Yep.
working from.
First one. Yep.
Okay, so there we go. All right, now let's go in here. Okay.
And I could do this shit all day. This is so interesting to me.
Yeah, well, and it's pretty cool, right? I mean, you see the symmetry in these markets. So, you're frustrated with Bitcoin, but if you can kind of put this in perspective, and again, this is a daily chart, you can go into shorter time frames and you'll find the same thing. It just won't show up on this chart. So there, that one's good. This one's good. Don't really like that one. That one's a little bit off. Maybe we'll come back to that one here in a minute.
Okay.
This one's good.
Yep.
Do we have one here? Well,
Yeah, we did.
we
Not
do.
that
I think
spike.
we do have one there. We can call that a good one.
Yep.
We do have a little bit of a spike below. I don't know the history on that right there, that little spike right there, but I do like it down to this point where the base was really built. So let's go ahead and put one in there. We'll get rid of this guy.
Yep.
Get rid of this one. Let's put this in there. So we have this down to here.
Yep.
All right. So we do have that spike that sticks below, but you can see the bulk of the trade is, let me adjust this too, just so we don't lose our black there. Let's do it to here like that. That keeps it a little bit more clean. Okay.
Yep.
So you can see we did have that spike down below there, but you can see there's a lot of sideways trade that goes on there. So I'm good with that. I'm good with that one myself. And then, I think this is one here right here too. We'll come back and check this one. And I think we might have another one here. And here, we'll come back and check these. I think this is another one right here, Ryan. I'm pretty sure we're going to see one right there.
Yep.
And then, so let's do that. All right, let's go back to our start here market. So we're working off the same thing. Okay, so this is good. This is good. Okay, nothing there. That's good. That's good. All right, definitely one off that. You see that right there?
Sure do. Sure do.
You see that high down to this low. So we'll come back and we'll pick that one up here in a minute. And if you look at that one's a little bit off right there. We'll come back and because I think this one's more symmetric with this guy down here. So we'll come back and we'll add to that one later. But I think that one's good. And then I think we've got this one. I think we're good here. And then here's one we're going to get into in a minute. Don't let me forget this right here. See that gap?
Yep.
So I don't want to forget this because this is really important. So when I was really
I'll take some notes for us. So
yeah, let's not forget to come back to that gap because this is really important here. We'll see this a lot. So remember when I was talking about the harmonics at the halfway level, we look at what happens at the halfway level. So we'll get into that in another session if we do another session here because I want to show, and we might have time at the end of the show depending on how things are going. But when we have a halfway level, I don't know if it helps.
Oh yeah, there we go. That'd be way better if you can leave your camera up there. That'd
I'll
be
just
sweet.
Do that. Okay, cool. I'll put it down there.
Oh yeah, that works great. Sweet. Okay, now cool. Hell yeah.
All right, great. And so the reason at that halfway harmonic, right? Think of it like a hill, right? I think of it like when you're climbing up a hill and you get to the top, and you roll over. When we look at the harmonic structures, and I know this sounds like, what is he talking about, these harmonic structures? But we'll lay it out just like we lay this out, right? And so when we're going to that halfway level, what we want to see is, does it gap through it, right? If it gaps through it, we know that it's a very strong impulsive move. So now we can really go back to things like Elliott wave, and we can look at these other things and start taking measurements on our wave structures. So when I see this gap, I mean, this is, I'll bet you, just the way this thing lines up, that this was a harmonic structure in here, and that was a halfway point right there.
Yep.
I'm just, and you can see it by the symmetry, right? You can see that if I look at this and I go from the gap down, I mean, it's not perfect, but you can see that this becomes a pretty big down in here. That becomes a pretty good
Yep.
line right there, where there was a lot of trade taking place. So when I strike it from there down to that gap, and I go from that gap down to there,
I see what you're saying.
yeah, there's a lot of stuff at the bottom of that green line, that lower green line. There's a lot of stuff down there, a lot of sideways trade. So anyway, let's keep moving on here so we can get through this so you can see this come together. All right, we have this. All right, then we have, and I almost even want to put one on this, Ryan.
I do. Yeah, I like that. That's good for sure.
I like this one too. So what do we have? We have that. Or are we going to leave this one alone? Did we decide this guy from here up to here?
It was close. It wasn't much trading. It was just a little spike down. That's up to you.
Yeah,
it still fits. I mean, it's close, but
yeah. Well, let's take care of this one because we know this one's good. So let's put this on. We'll go from here down to here, right?
Mm-hmm.
And then we have, let's see here. I think we liked this one too, didn't we?
Mm-hmm.
I'm going to come off to the side of that just to keep the chart a little bit cleaner. We'll come back and we'll double check that one. I'm not convinced on that one yet. And then were we saying this one down?
You were saying from the gap down, remember? Oh yeah, no, that was good. That was good. Yep.
I think this was a good one. And then we'll do the gap down too. I want to do that gap here in a minute, but we'll color that in a different color.
Okay.
Okay. And then we've got that. And then we have this one down here. I think we were pretty good on this one. So from this low up to about here, and we'll come back and check this right into there. And then I think we found this one from here to here.
Yep. And then one more at the very top.
Yeah. And then this one right here. Let's keep that off to the side there in case we find more up there. Okay. So let's go back and double check this again, make sure we're good with these. So again, like you said, you just have to kind of enjoy doing this, and it's sort of a little bit of detective work at the same time, a little bit of painting, like you're painting.
Yeah, you're
right?
an artist over here.
Yeah, so that's good.
And do you have like when we get some that are close, is there like a percentage where you're like, yeah, if that's off by more than like 3 or 4%, like it's just too much variation? Or are you just kind of going off of?
Yeah, I like them to be exact, Ryan. I like to find the ones that are exact first, like really, really close, And then what I'll do is go and see if there's a smaller one. And what that'll tell you is, if we get time, we'll take a look at the gold market. So gold went sideways for a long time, from the late 70s into the mid 90s, right? And it was a sideways channel. We could get into the whole story behind that, right? It was a lot of manipulation going on there by big central banks, selling calls, buying puts, right? Holding the market in there, creating fear, and, making a lot of money off of that. But when it finally broke out, we can use this symmetry to measure that first impulsive move, and we can use it as a pretty good stop, right? So as that gold market goes higher, if that move down, that retracement, right, that first move down, like we're showing right here, right? So the one like we're showing here. So that's why we want to use this first thing, is we can use this as a kind of our stop, right? And if we're how do I put this? If you can use it in a lot of different ways, but the way I like to use it is, I like to look at this as kind of like people talk about value at risk, or these volatility bands or something like that. But what I like to do is look at the actual market structure. And what I'd like to be doing is buying down in here if I can, because I know if there's symmetry to this move, well, especially off this one, right? The second one. So what I can do is I can come down in here, and if I have other stuff, what I call confluence, a lot of other things that are showing up, I can be a buyer somewhere down in this area. And I know that if it starts breaking below that, it's not a symmetric move anymore, right? Something's breaking down, and it's starting to expand on the downside, right?
Hmm.
A lot of times what will happen is when a market starts to run away, it won't retrace as much as it does at the beginning, right? Markets like to retrace a lot at the beginning. Think of Elliott wave, right? One,
Hmm.
two, then you get that three. And the rule with number three is it can't come back across it, right?
Yeah,
That's the
can't
rule.
touch the top of number one, right?
Exactly. So what's happening is you're getting a market that's expanding, right? And hopefully most of the audience knows what Fibonacci is. I don't know if you've covered that at all yet.
Many times. Yeah, I got a lot of tutorials out there on
Okay.
it. But
Good,
I'm
good,
not
good.
not nearly as well as you are. I mean, I just have my own style to it, but
Yeah.
um,
Well, as long as people have familiarity, that's what matters, right? As long as they
mhm,
understand, 1+1 is 2, 1+2 is 3,
mhm,
2+3 is 5, 3+5 is 8, right? And that's how the thing expands. And then you understand the pentagram and how the 618 and the 3812 are formed, and then you get into we should do a show on that sometime,
I
right?
would
Because
love
it's
to
just
do a show on that. Yeah, man. I need a refresher for number one, but it sounds like you're way more in depth and knowledgeable about that than I am. But I would love to get myself caught up to speed. So
cool. So yeah, so let's just double check these. So I think we're good with all these, right?
mhm,
That one's a little short, but not bad. Right? That's pretty close.
yep,
This one's good. And remember, we're coming off this high down to this area right down in there. Okay. So we're
yep,
not just to not confuse it with this area over in there. And then this one, I think we're pretty good with that one.
mhm,
That one's a little short, so we didn't pick that one up. That one's Yeah, I like that one. That one's fine. I'm good with this from this low to this high.
yep,
And then we have this low to this high. I'm good with that one.
mhm,
And I'm good with this one down into
yep,
here. That's good. I'm good with that one for sure.
yep.
Okay, I'm good with this. What we're measuring, I should probably expand this. We're
I
really
see what you're
measuring
saying. You get to that
here.
high over there. Yep.
Yeah, let me just clean that up. How's the tempo of this? Are we doing all right, Ryan?
Doing great, man. Yeah, we're no rush. That's what I like about these nighttime shows. My morning shows are more so stuck to an hour time frame, but this one I have no time limit. So as long as you want to, I guess I don't have any time limits, but I do have to be up at about 6 in the morning to cover you guys' show. But other than that, man, it's just a normal day.
All right. I just want to make sure people aren't glazing over and stuff. So, okay.
No,
So
man,
there,
it's all about education on this show. So, you're adding so much value to, so many people just get in the market and think they're going to trade and then they're out there trading against people like you. You know what I'm saying? So it's like, I just want to show people, even if they're not going to trade or they don't care to learn about this, just having the knowledge to know that people are out there doing this, and then take that a step further in crypto. They're out there doing this with a bot. So they take what your people with your knowledge and they code out these bots that just trade at like a level that you on your computer with a couple screens, you're sorry, buddy, you're probably not going to cut it. You're going to be the what do they call it? The mark when somebody sits down at the poker table and it's like, yeah, we're taking your money, buddy. Thank you.
yeah, the hammer or the nail, right?
Yep. Yep.
So I kind of like this one here too, Ryan. You see that from
I
this
sure do.
low right
100%.
into that little area right there. So let's go ahead and mark that one. And then we'll call this one. We'll put a fork in this one then after that. Okay. So we go from here up into there. Go ahead and cover that. There we go. Okay. So I think we've got those on there. Just double check this one. So I got it a little bit short, but that's good. That's good. That's good. All right. So let me condense this down here. We can kind of see what we've got here. Okay. So we've got our two big ones, right? These two big black ones, right? Those were our two big ones that we saw right out of the gate. Almost exact, right? Those are almost perfect, right? And then we've got all these turquoise ones that we're liking. Okay. I think we're pretty happy with all those. And then what we can do is let's go back here and start looking at some of these gaps. All right. So we've got a gap back in here. See this gap right there, Ryan?
Yes, sir. Sure do.
Okay. So let's pick this one up. See if we've got something. So we'll go to the middle of this space right there. Okay. And then let's see what we get. Not bad. Let's go ahead and mark that. And I'll show you why. So we've
Okay.
got from here to here, and then we'll go from here to here.
Just heads up, that bottom one's kind of behind you a little bit, behind your photo.
You can't see it.
Yeah,
There
there
we
you go.
go.
Perfect. There we go. Yep.
Okay. All right. Let's change the color on these. And so, hopefully what people are getting from this is that let me keep it. Yeah, I think there we go. Let's keep those the same. All right. Is that, sometimes I'll take trades, Ryan, for, sometimes 3 seconds, and, sometimes it's $100 or something. Right. And,
Mm-hmm.
because you're trying to buy and sell, right? So sometimes what I like to do is I'll buy 2 or 3 units, whatever that is, could be 10 contracts, 20, 30, whatever it may be in the futures markets. And then I'll try to immediately I'll sell something, right? Just to take that profit, lower my average price, right? And so what we're doing here with these gaps is what we're trying to do is we're trying to keep the whole big picture in perspective, even though we're going to trade short term sometimes, right? So people will say, well, yeah, but why do you care about these daily and weekly, monthly charts if you're just in there trading, for 3 minutes, 5 minutes, half hour? Well, because a lot of times I want to hold something for a year or 2 years or something, or like cryptocurrency, like Bitcoin, right? Like I want to hold that for as long as I can, forever,
Yeah,
right?
forever.
But what I want to do is I don't want to just I don't want to just sit there and, just be a deer in the headlights. What I want to do is be active around it, right? So I want to be trying to buy and sell because it does two things. One, if I get it right, it continues to lower that average price, right? So it's sort of
Mm-hmm.
like, it's a lot like
Yeah.
mining Bitcoin in a sense, right? I
Yeah.
mean, it's
Yeah.
sort of mining it by trading it. If you can trade it, it's the same thing. It's similar to mining it, right? And you can continue to accumulate it. The other thing it does, it keeps you active, so you're feeling the market, and as long as you
Yeah.
keep your losses fairly small and your winners fairly big, or at least bigger, right? You can afford to play that game for a while. And so, okay, so we've got that on there. So we're looking at that gap, and let's go back here. This was the one we were going to look at, right? I think it was this one from here to here. This was that other gap. Let me clean that up a little bit. All right. And then let me change the color on that. Okay. And then what we'll do is we want to keep this symmetric here as we go down. So we'll go from here to here. We'll go from there to there. For some reason, I'm not liking that as much as I did before, but I do see that it's holding a couple times. The market's definitely trading around that. So we'll mark this and we'll keep it separate as a gap. All right. Let's get rid of that. Let's go see if we've got anything else here. Okay. Now, let's go searching again here, see if we've got something. Okay, so we know that's good. I'll mark a trend line down there here in a second so you can see why I did that. Okay, so nothing really there. Maybe a little something there, but not worth probably marking. So it's exact same size as this one, right? You see
Yeah,
that?
that's what I was wondering. I was wondering if they were the same size.
Yeah. So exact same size. So the point is that there's some symmetry here in this gap, right? That's what we want to see. And this goes back to that harmonics. It's probably a little too much to get into right now, but the beauty of it is I think I'm probably right on this. Next time we do this, I'll make a note of this. What I'll do is I'll make sure that we can look at SQL and we'll run some analysis in SQL so we can see all the prior daily, weekly, monthly signals, and we'll be able to pull out if there was a harmonic there. Does that make
Okay.
sense?
Cool. Yeah. Yeah.
So it's
Yeah.
nice because we can basically data mine. We can data
Mhm.
mine for it, and you'll get to see how we do that, which is kind of cool. So anyway, but I like this a lot because of that, right? One, we see it here. It's the same size as all these other things. It's right at the gap. It sort of plays out down here. Let's go ahead and, well, let's skip that. I'll come back to that in a second. And then, so we've got that one. And I'm going to go ahead and label this one green just because I think, I'll show you here in a second why. Even though it's the same size as what we've done before, I like it because it's in a similar spot, right? You can see this thing. So see this saucer bottom, we kind of have this base being built here. So
Yep.
we kind of gap down into it, right? We went sideways for a long time, right? All the way through 22. And it's the same thing that took us down into it, right? Through this gap is essentially the same thing that was bringing us out of it. Does that make
Sure
sense?
is. Sure is. Yes, sir.
And look what happens out of here. We get this acceleration, right? This last big wave up that we've seen in
Mhm.
Bitcoin, right? So the same thing that took us down into this doldrums, right? That lasted for, what, 2 or 3 years, 2 or 3 years is the same thing that takes us out. So that's why I kind of want to label that separate, right? And I like the symmetry down here. And here's what I was going to put on there is this right here. Here we go. So I'm going to put this at the bottom so you can see why we did that, okay? Even though it doesn't go to the bottom, right? It's a gap. So we're taking this green right here is the same as this green right here. But what we're doing is we're seeing that there's a lot of trade that's going back and forth across this level. You can see, let me mark this here so you can see exactly what I'm talking about. So you can see this guy right here, okay? You can see this trading right in there, right? I'm going to skip this one, although I think it might be legitimate, but we'll skip that. This, right? And then look at this right here. That's that little spike low right there that, burns everybody, right? Everybody takes out prior lows. That little guy, that little leg right there takes a lot of people out right before that pretty sizable move. What is that from, 20,000 to, what is it? 30, 20, yeah, to 30. So this move right here takes a lot of people out, that little spike down, and then boom, market's off to the races. So there's 4 points down here, right, where that trend line, where that gap played out.
Yep.
Does that make sense? So
Yeah,
I know
yeah.
it's not perfect, but you have to sometimes like look sometimes you got to look around the corner. Does that make sense?
Yeah, 100%.
Cool. All right, so let's go back here and let's dig in just a little bit more because I think I've seen a couple other things here. Let me see here. Let's check this out right here. Okay, if we take that one, there we go. Okay, so see this? So now we've got some fractals going, right? So we've got these little turquoise guys, right? But we're going to take this swing high to low, right? From down here
Mhm.
up to this swing high right there. And then we're going to put it on this. Let's measure it from this high.
Oh, yeah, I
Right?
see it there.
See that?
Yep. Mhm.
All right. And then if we come over here, let's see if we've got another one in here. That's pretty good. You see that spike low,
Sure do.
right? Up to
Sure
that high.
do.
There's
Sure
another
do.
one. All right, so let's slide over here. So we'll come back and we'll mark these here in a minute. Let's just keep hunting here. Look at that. From that low down to that high, that spike high right
Sure
there.
is, Brody. Sure do.
Yep. And then let's take a peek at this. This one's a little tricky, but
Yeah,
I think, see
I think
that
so. Yeah.
little leg, that whole
Yep.
last leg up is the same thing, right? So you see
Mhm.
some. So
Wow,
let's go
that's
back.
freaking nuts, man.
Isn't it crazy? So let's go back here and let's see, this is what just fascinates me in the markets, right? This kind of stuff is just so cool. But and it's sort of sort of a bottomless pit. When you get into the harmonics of it, it'll blow your mind even more. All right, so let's do this.
Man, it's so crazy is I used to make fun of like when I first got into the crypto, not first got into it, but last bull run, I was like, okay, I'm gonna interview all the best traders out there and see how they trade. And like every trader I interviewed would come on and draw different lines in my chart. And finally I just got to a point I was like, man, these fuckers are just drawing lines on charts, man. Like none of this shit makes sense, but not one of them. Like they had a few indicators they were using, but nobody was breaking it down like this. Not one person I interviewed. They were drawing weird ass lines in charts, and I was like, okay, dude, like this. I'd always be like, oh, where's the market going? And like they'd tell me, and the market would would never go in that direction. So I just gave up, and I was like, all right, I'm just gonna put bots on this and let bots trade for me. I can't fucking do it, but you're giving me a whole new perspective on the market, man. This is blowing my mind.
Yeah, and the thing is, what I don't want people to think is that you can actually go out and like trade off of this, right? Like you
Mm-hmm.
can't really. So, but we'll get into that in time, right?
Yep.
You'll see what I mean. But you can get perspective, right? And that's the thing. And,
That's.
and perspective means conviction, right? If you have
Mm-hmm.
perspective and you have conviction, right? A lot of times that's what it takes. I mean, you got to have balls because sometimes you're all by yourself. You know what I mean?
Yes,
You're in that
sir.
trade and there's no one else there with you, so you have to be able to find conviction, and, okay, where was our other one here? Did I mark that? Okay. Yeah, this one. And we'll come back and check these just so everyone can see them. I don't want to leave people hanging saying, wait a minute, he's drawing these damn things on here. And, there's no, we'll come back and we'll double check them here.
Yeah, this gives you a general idea too when you're looking at, where a potential top might be or,
Right.
how much upside potential. It just gives you at least something to go off of, some range or some like symmetry where you're kind of a ballpark of where you expect price to go or where price may or might go, correct?
Yeah, that's right. And so, and what we talk, what I was mentioning before is we have confluence, right? So what we're looking
Mhm.
for is confluent things. And so this is just one of maybe two or three things you're looking at. And but when you have all these things meet up at these points, and better yet, Ryan, when you get a spike like this, right? And it's,
Yeah.
it's wispy and it's scaring everyone out. There's no volume there, right? It's just there to take people out, shake everybody loose, right? Shake the fleas off off the horse, and then
Yep.
off it goes, right? And anybody who's
Yeah.
traded knows what I'm talking about. So let's go
Mhm.
back and double check these here real quick. Make sure everybody's good with these. All right, so we've got this and this. Okay, we're good with that, right? From this
Yep.
low, so
100%.
everybody knows from that low up to this high.
Yep.
Okay, so that we're good with that one. Okay, we
Yep.
got
We're good
that.
with that one.
We got that high down to that wispy little low,
Yep.
right? Okay, we're good there. Then we come over here and we've got, okay,
Yeah.
so there we go. We've got that one, that low, all the way up to this high right there,
Yep.
that guy. And then we've got this last leg up. Now, granted, this is a little tiny, leg down,
Consolidation. Yeah.
but it could be if we're starting to look at Elliott wave, we could do this in multiple. Well, we could, Elliott wave, right? We could
Yep.
break this down into 1,000
Yeah.
right? But the point is, you're looking at what we're looking at here. When you look at this, you clearly see a build out from a base, and you're
Yep.
looking at, you could call this a 1, and this a 2, or this your 2 over in here, and then you could call this your 3 right here,
Yep.
and but the point is, you can see that this is a weak move. And if you're looking for a target on the upside, so when you're looking at this and you're saying like, okay, where's this market going to stop? If you have these prior red ones, and you can
Yeah.
say, well, you can at least, again, you can't trade off of, you can't be sure, but it gives you perspective, right? And so if
Yes,
you have
sir.
other things lining up and you have divergence or something else that's occurring up at the top here,
Yep.
or even just sentiment, right? Sometimes sentiment gets so high, right? Like we saw, these ETFs were on fire. We had back-to-back days of, people just piling in through the BlackRock
Yeah.
ETFs. Right? It was record
Insane.
day, record day, record day. You start to sniff out like, wait a minute, something's done. So if you see this symmetry coming in and you're like, wait a minute, there's symmetry, there's vibrational patterns that are happening out there, right? There's this stuff, these harmonics, these vibrational patterns that we have to try to uncover. You see this sentiment getting high, you see everybody piling in, right?
Mhm.
And then you're like, wait a minute, you know, I'm thinking, you got to be pretty quick, right, to catch that little leg up and draw this thing up to there, right? So I'm not saying it's
Yep.
easy. I'm not sitting here, I don't think anybody's going to call this the holy grail. But the point is, it's pretty impressive when you see the symmetry that's going on in the market. So just
Yes, sir.
even with what we've done right here, I mean, I think you can look at this market, and I think there's a couple other things we can pull out of here if we want to do it. We can either kind of put a fork in this if you want, or I think we could pull a few more things out because I
Let's
see a
pull, man.
couple.
If you got time, man, I'll go as long as you want to go, man. I'm eating this shit up.
Okay.
Thank you,
All
man.
right.
Thank you
Let's
big
do
time
it.
for coming on. I appreciate it.
Yeah. Yeah, for sure. Okay. So, yeah, I think I've covered something up here with this. I'm going to go ahead and let me redraw this rectangle.
Are you guys able to copy and paste in this program like you are in like if you drew one of those lines out and you had the size, are you able to copy and paste it and move it around your chart, or do you have to physically draw them every time?
I think you have to physically draw it. Yeah, it's kind of a drag. There's downsides to every program. Yeah, so
Yep. Yep.
we were covering some stuff up there. I was
Hmm.
kind of afraid of that. What did we miss here? All right, well, let's check something out here. Let's just look at this one and see how it compares to the other ones.
So you're saying now you take this data that we've kind of marked out and you put it into another program and it feeds you out more intel?
No, this is kind of just get us a feeler on,
Yep.
harmonics and symmetry and vibrations that are going on in
Hmm.
markets. So, you're in the middle of, you're trading Bitcoin, right? There's all this emotion, right? It's
Hmm.
like you said, right? Big swings up, when you were trading it last time, and
Oh
you know,
yeah.
and then big swings down and grind sideways for a long time. Sometimes that's the hardest point is, just grinding through the sideways well, we're seeing it in the currencies. I mean, if you want, we'll take a look at the dollar because we didn't really get into that. We were talking about that before we came on air, and then I kind of gave you my background. We didn't. At some point, we should probably take a quick look at the dollar here because
Yeah,
it's
do
just
it whenever you
fascinating
want.
to me. But let's wrap this up here because I
Yep.
think let's put another 3 to 5 minutes in this because I think we can. Yeah, let's mark this one. I think there's some more here with this one too. So if we've got that,
Yep, I see it there.
so that's good. I like that.
Hmm.
You could maybe even call that one. I don't know if you see that, but see that
Yeah, a little
low
bit.
right
Yeah,
there?
100%. Not
There's
much,
something
but
there, but
yeah.
let's skip that one. But I think it's up to you. Do you want to put it or not? It's your call.
Well, I like the one to the right a bit better.
Yeah, yeah.
Yeah,
That
that
one's
one
for
for
sure.
sure. The other
That
one
one's
was just kind of like one line or two lines. So I don't know. I don't know what your. It's definitely there, but is it enough? Was there enough? Like you kind of say you got to have some movement left and right.
yep. I do like this one right here, this high down to this low. See
Mhm.
that one?
Yeah, yeah, yep, for sure.
Definitely like that one. And let's see if we've got anything over in here because this is kind of a choppy space. I'm not seeing much of anything in these swings. We can go back a
Now,
little bit and
let
check
me ask you
this.
too: is a lot of people have a chart? What are your chart settings? So like, it's this log. Um,
Yeah, good question. Yeah, I think that's a good question. I don't know what it is. And I used to do that all the time. It's just a
I don't
straight
think
up.
it's
So
logarithmic. Yeah, I don't think it's the
this
log
isn't
scale.
log. This isn't the
Yeah.
log scale. Yeah, I think this is just as clean as you get. So it should be so in futures markets, I mostly trade the futures markets because they're
Mhm.
so efficient at getting long and getting short, right? So there's no friction in either direction. Whereas, Bitcoin, it's tough to get short if you're not using the futures. Same thing with sometimes a lot of stocks too. You puts aren't, depending upon the skew and the volatility and different things, right? The calls and the puts aren't always equivalent, right? And it's harder to get into one side than the other, and it's harder to get out. And so I just
See,
like futures markets because they're so efficient and so liquid, you know? So, and these are all, if the longer ones like this are what are called 067 contracts. So,
Mhm.
there's multiple forms of them. I think there's I forget all the different ones, but I've always, whether I was at NDR doing this for hedge funds or whether I was in Chicago doing this for, who knows, tons of different people, I've always just used the 067 contract. So
Mhm.
if anybody's looking at these futures markets, just look for the one that's the 067 or ask whoever your vendor is for your data. Is this the 067 contract if you want to look at this stuff? Because it's just the cleanest one of all of them, right? The other
Mhm.
ones always have a twist to them.
Okay, so
It's one of
it's funny. It's because you trade the futures. When we trade, or most people I know, we just trade long and short on a crypto exchange. So I don't know how to explain it. I know some people trade these options, puts and calls, and I don't ever I've never traded those. I've always just traded just straight long or short. If that makes sense to you guys. I know it's completely different in the crypto space. So it's but yeah, like do you guys pay funding? I don't think you do.
can you what do you mean by funding?
So like when I'm so there's in crypto anyways, you pay a fee to be long or short depending on which direction the market's going. So if the market's bullish, for example, the longs are paying funding. And I think it depends on how bullish or how bearish the market is, but every 8 hours I pay a fee to either be long or I get paid a fee to be short or vice versa, just depending on, if
Okay.
the market's really bullish and I go bearish, well, I'm getting paid by the longs to hold my trade open. Um,
Got it.
if the market's really bearish and I'm long, then I'm getting paid by the shorts to hold my long position open, and I pay a fee every 8 hours to hold that trade open. Um, but I can take a trade at any time for almost any amount with any amount of leverage, and there's always somebody on the opposite side of that trade. I guess I should say I've never, been in a position where I couldn't open up a long or short position. I don't understand how it fully works, but I've never traded like an option or a futures. I'll show you here when we get off. I'll show you how it works when I get off the.
Okay. All right. So there we go. So I'm going to just say we can call it with that. So let's just recap this, right? We had these two ones we started off with, right? These
Mhm.
The two big black ones that we drew in here, those are those two big symmetric patterns. And you know what I could do is I'll make another one here and clean it off so we can go back and forth. That way you can see the two of them. How's that sound?
Sounds good.
Let me just slide this over.
Oh, that's cool. Damn, your programs are so much more advanced than what we're using.
Hopefully, okay, there we go. Let me, I think I can just replicate this too. Well, maybe not. Yeah. Well, just in the sake of time here, what we'll do is we'll just kind of flip back and forth between the two so we can see. So when we look at this, right, we look at this and we see, okay, just a bunch of noise, but it's this high to low right here, not high to low right there that we just picked up with the black, right? So
Yep.
there's the black ones. And then we did a good job with this turquoise. I would say that's the biggest point of symmetry in this whole thing is the turquoise. And what I like about it is I think it's about half the size of this, the red one. All right, so let's just double check that real quick. So if I take this, no, not quite.
Oh, close.
Yeah, I was kind of hoping that was the case, but it's not.
What about
Okay.
double the blacks? Is it double the black?
Yeah, let's check that. No, a little bit short. That would have been nice. That would have been pretty cool. Yeah. So the turquoise, I would say, is the dominant symmetry that's running throughout this whole chart. The reds are pretty significant too.
Oh, it does look like your tan or your beige is double the reds.
Yeah, let's check that.
It almost looks like two of those are going to be.
Yep, look at that. You got it, Ryan. Good job. Good eyes. Yep, there it is. So two of the yellows is the red. So that is pretty cool. I mean, that is pretty neat. We saw that, right? So that's the thing, it's what I don't want to, make people think here is it's, to your own imagination. I mean, it has to be bound in some sort of like logic, right? I mean, because and what you'll see when, at some point we take a look at these harmonics is that there's so much beautiful symmetry in there. And, to me, I know this is going to sound kind of quirky, but, LFATV is the right place to do it is that, to me, it's increased my faith in God, like, tremendously because I see the vibrational patterns and it doesn't matter what market I throw it at, Ryan. It's just fantastic, and it's just so captivating to me to do the research on it and see like, it just gives you faith, that there's stuff out there where, so do so many other things. I mean, having kids and there's a million things, right, to give you faith. But I mean, I see it in the markets too, and so it's just fascinating to me, and
yeah, absolutely.
Yeah. So anyway, so I think we're good here. You think? I mean, you think we've kind of
that was sweet, dude.
Yeah. So the big thing here is that, and back in here through all this sideways right here, we'd have to go into a shorter time frame probably so that we can get a good look at it because we could start drawing little lines, but the thickness of our line is going to distort it and we can make anything look the way we want. Does that make sense?
Yeah. 100%.
So we just have to be honest, when we do this, because again, we're the ones that have to live with it. Right. So, but you can kind of blow it up, and you could start going through here and looking for symmetry too, but you can see there's there's a whole different profile over here. I mean, Bitcoin's gotten so much more active since, this 2020, the ranges are bigger, the movement's bigger. So we have to look at these two things and, like we did with this yellow, 2 yellows equals a red or whatever it was, you might find that some of these are fractals and they might add up to the turquoise, right? You'll kind of see that, where it all fits together like a puzzle piece. If you're willing to dig enough, you'll find it. And that's what's so cool about this stuff.
So when you do this, like right now, where would be your next step? Like if you were looking for a trade setup on Bitcoin or just to see if the market's even prime for a trade setup, you've got to this point, what would be your next phase that you're kind of like, okay, like this is just, I don't see a setup here, or maybe the market's going to be setting me up for something. How do you go about from where you're at right here to like, I might want to take a trade?
Yeah, that's a great point. So what I would do is let's take this yellow one, right? Because that's the smallest one that we have, right? So let's take this yellow one. Let's just do that, right? We'll come in here and we'll come off the top of this. And look at that.
Oh, shit.
See that low right there?
I sure do.
So right there, I'll put a little circle on it. So that would have, again, we're still talking hindsight, right? It's easy to strike lines. So
It
now
is.
what we
It
do,
is.
so what we're going to want to do, Ryan, is we're going to want to look at, um, you know, we know the yellow is our smallest, you know, measure of symmetry that we were able to find.
Yep.
You know, we know that the turquoise was next, right? Green's right about the same size. And
Mhm.
remember, the green is, we labeled the green separately because of the gaps.
Yep.
So we're trying to keep track of these gaps. And so what we would do is we might look for gaps, right? We could go in here and we could look at this and say, okay, do we have any gaps? Because what do gaps mean? Just from an emotional standpoint, it means that, somebody's pushing this market, somebody's, in trouble in this market. It's probably a
Mhm.
combination of the two, right? It's usually not just one side, or it's not one side or the other. It's usually both, right? There's a there's a repricing going on, and someone's in trouble, and and someone's
Yep.
pushing, right? So that's what creates that gappy, that repricing that occurs. So we would probably want to look at some of the gaps in here. So we'd probably go down to like a 4-hour time frame or an hourly time frame, and we'd try to
Mhm.
do the same thing. And what we would do is we wouldn't go all the way back into here. We would just we would try to isolate, a window of maybe like we try to maybe isolate something like this right in here. We try to isolate this space, and we would try to drill down into our time frame. We could start looking for this same kind of symmetry that we could lean on. And what I like to do is, if we have the yellow, in that case, I don't know if it got there exactly, but it got
Mhm.
close, right, as we can tell. So the next thing we'd want to do is kind of drill down in there. If you're looking for a trade for a couple days or something, or a short wave, you'd want to drill down, do the same kind of process we did there until you felt confident with it.
Mhm.
Look for that pullback, because again, you'd like to, what you don't want to do is reach for markets, right? When the markets are
Yep.
going up, you either hope you're in, or you got to find a way to wait, be patient, and let it come back in a little bit, right? Buy
Yep.
on a dip or something, and it's hard to do. I mean, it's hard because you feel like, man, Bitcoin's going to 600,000, or 100, and
Yeah.
and you might be right, but there's so much trading that goes on in between here and there, that it's going to give you, to hundreds of thousands of opportunities, and you just have to sell yourself on that concept that it's going to give you a chance again. You just have to. And so the the problem is, when I say that, is that I've got all kinds of systems set up, that I wouldn't call it artificial intelligence per se, but it reads off to me, right? So I can basically turn a knob in terms of
Yep.
risk and entry, momentum. So I
Yep.
can dial these different knobs in this shorter time frame, and I can have the thing actually read off to me. Okay, like Bitcoin, and it'll have a certain sound that goes with it. So I know it's like, whoa, that's important. And I look up at it, and then I take a quick look at it, do my research, oh yeah, I'm good with this. If it's sitting right on a risk curve, and we can get into that sometime too. But I really look at it like a triangle. You've got, structure, momentum. I also call it torque. There's a whole lot that goes into
Mhm.
momentum and torque. And then you have the other side is the risk. So structure, momentum, and risk. And I look at those three things all the time. Because why we look at momentum and torque? Because you can get in and get out and make a lot of money fast, right?
Mhm.
Because you have that, that strong force behind you. You got to look at structure and understand the structure of it too. And then when we put in all these different time frames, so hour, 4 hour, daily, weekly, monthly, it's like, well, where do I know how do I know which time frame to focus on? Well, that's structure, right? So we'll look at, like, why would I be focusing on daily, or why would I be focusing on 4 hour, right? So we have
Mhm.
rules on that. Well, right, 4 hour for sure. And here's why. Sometimes it's not always clear, but most of the time it's pretty clear actually, it's always clear where to focus. It's just whether it's, you know, and when I say structure, I think of it like a teeter totter. You've got setup on one side, and you've got setup on one side and entry on the other. Does that make sense?
Mhm. Yes, sir.
You're looking at the setup components, then you're looking at the entry side of it. And you should have that dividing line between setup and entry. And that's your fulcrum, or your point where you're looking at it in terms of your time frames. I know that's a lot to swallow, but just to whet people's appetite, I guess.
Oh man, this is so interesting to me. Do you think you're going to get to a point like are you starting to focus more? I know you're talking about the dollar and everything else that what is your main asset that you like to trade?
Well, that's the beauty of the harmonics, is I don't really it doesn't really matter to me. I go where the harmonics are at. So the harmonics isn't a perfect picture, just like we see here, right? We've got yellow symmetry, we've got turquoise symmetry, we've got red symmetry, we've got black symmetry. So all these different markets have different things to them, uh, facets or, texture to it.
Mm-hmm.
And so, like for instance, I was just looking at some stuff right now. Like I've got, I can see there's overvalued building in the equity markets, especially in Europe, right? So I can see it. I wish I could show you this. I don't think there's any way that I can. I don't have a screen on this, but sometime we'll come back and look at that. But I can see it. There's a fair amount of overvalued building in the Nikkei, a lot in the Euro Stocks 50. That's probably the strongest. The French CAC Motif, right? That one's got decent overvalued. So you can look at these markets and you can say those are way more overvalued than like the Russell 2000 or than
What are you using, an RSI indicator to show you you're overvalued?
No, so back to NDR, my days at NDR, right? Like we used to do a sentiment measure where we would actually poll people, and we actually had people who polled people. So they would go out and, do an everyday end of day assessment on, what, if you've got 100 people or whatever, they take a percentage. And what you'd look for is when, it was either like below 10% of people thought the market was going to go higher, or if more than 90% thought the market was going to go higher. And at that point, that the last seller is sold when it's below 10, and that the last buyers have bought when it's above 90. And so, and that's just sentiment, right? Going against the sentiment. So whenever, just like we saw in, when everybody was piling into the, the BlackRock ETFs, it's just sentiment's high, right? Sentiment's very high. So the last buyers are coming in and buying. You don't always know because the game could have changed a little bit, right? Because, it's a new asset, right? The SEC just cleared it. It's it's a captive market. It's not, Ethereum hasn't passed it yet, nor have any of the others. So, it's a kind of a funneled market. So you're not really sure, but you get used to going against the grain, right? When sentiment's that high, you just know it. And so, what I did was I just found a way to come up with a synthetic sentiment. I can pretty much duplicate, by reading the bars off the charts. I have a program that basically generates sentiment all the time. So it's generating sentiment on all these different time frames, hour, 4 hour, daily, weekly, monthly. So then I can look at, like, sometimes you'll just see like every time frame's overvalued. I mean, basically sentiment's high on every time frame. So essentially, if you have day traders, that's going to be hour, 4 hour. If you have like long-term portfolio managers, that's going to be weekly, monthly, maybe even quarterly. So you can see like everybody's bullish, right? And there are times where, you'll see that everybody's on one side of the boat, and you're like, so then you make a note to yourself. And so I don't forget, I go in and I dial that stuff in, right? So then it tells me, and it creates a log, my own ticker tape that shows me, hey, these markets are, overvalued or under, and you've already plugged these in, and I'm going to alert you when you get your first sell opportunity, right? So again, you're being patient, right? Does that make sense? You're forcing
100%.
patience. Yeah. Okay, cool. Good. So yeah, so there's a lot. I mean, I've been doing, that's what you do when you do this for 4,000 hours a year, for 30 years, right?
Man, that's freaking wild. So do you have any trades that you can show us that you're looking at? Like maybe one you entered and, what you were seeing on the chart so people can get an idea of when this all comes together?
Yeah, so this is one of my favorites.
I know you wanted to show us something $1 too, so we can do that
Yeah.
too if you want.
Yeah, we'll do that because this will go together. So let's take a look at gold. Everybody knows gold. So we'll take a look at gold here. All right. So I was going to show you something in here, but we'll skip this. We'll do this another time.
Go ahead.
So
we got time if you want.
So this is, well, I'll at least show you a little bit so we can, tuck it away from when we do it next. This will take a while to go through, but this is that sideways channel that I was talking about in gold that lasted from, 1982 until basically right here, the breakouts, let's say 2000.
Are those your Bollinger Bands? Is that the red and the white are there?
Yeah. So what I use these for, Ryan, is, have you ever heard of a squeeze?
Yeah, it's where the Bollinger Bands get super tight. You're going to break out one way or the other, correct?
Right. So what they do is it's, what's the other band? They're, I forget what these are called. We'll get that. I'll get that to you. I can't remember the name of it off the top of my head. So essentially, Keltner channels. That's what it is. So it's a Keltner channel and a Bollinger Band. So when the Bollinger Band goes inside the Keltner channel, and you got to kind of set it up. I've set this up. I'm pretty well versed in back testing things. So so you're not skewing. you're being fair, right? In and out of sample, making sure you're getting a decent, statistical test on it. But what you do is when the Bollinger Bands go inside the Keltner channels, it's energy's building, right?
Yep.
So it's
Can
a
you
good
zoom in
way
on
of,
that a little bit?
yeah, let's do this here. So what I would say that fueled this big move up, right, was, this, you can see the red was going in, fiddling around with the white, right? So the white is the Keltner channel and the
Okay, that's
red
what I
is
was
the
wondering.
Bollinger
Yep.
Band. And so here you can see it there, right? You can see
Mhm.
it was inside there. Let me flip over and show you one that I was trading here that was, you almost, well, we could, this is great. I mean, we could go into so much, but let me show you, see if I can pull this up here. This is wheat market. So again, this stuff works across all markets. That's what's great. Okay, so here's the monthly. This is monthly wheat.
Mhm.
And you can see that we had the same thing happen here. I'll clear this off there. Okay, so we had this prior high back in here, right? All the way back in like 2008. So this was when the ethanol craze was going wild, right? Remember
Yep.
that?
Mhm.
Well,
Sure do.
this might have been no, this was the ethanol craze. Yeah. So we get this real high in wheat, this spike high. And then, and if I look at this, I think the weekly might have been even better in this. Yeah. Here we go. So again, this is why you can use multiple time frames, right? So let's look at this
Mhm.
monthly. And here we get the same thing, right? The red goes inside the white. Okay, so you
Mhm.
know that well, you don't know, but there's a high probability that there's going to be an energy release, right? And that's what we
Mhm.
got, right? We get this blow off in this wheat. Well, this is Ukraine, right? Ukraine was the driver of this, right? But the key is you got to
Damn.
know before that happens, right? But if you go back here to the wheat and you look at this, you can see this was building for a long time, Ryan, right? The red's inside the white,
Yep.
right? Red's inside the white, right? You can see the building, right? It's just building tons of energy right through here. And then look at that release, right? So if you can handle this whipsawing that's going on right through there, you're in pretty good shape for that blow off. And sometimes the hardest part is just sitting on your hands and letting the thing go, right? And saying like, okay,
Mhm.
here comes the war. Ukraine's a breadbasket for wheat. They're going to restrict it. I just need to sit on my hands and let this thing rip. And why would you let it run? Because there's a prior high up here. Markets love to retest highs, right? So again,
Yep.
you can say symmetry and say what you want, but look at what almost exactly there. It may have even pierced the high. I don't remember if it actually pierced it, but that's why you sit on your hands until at least gets there. And if it blows through that, maybe leave a little bit on in case it blows through, and then it's
Yep.
going to, if it blows through that, it's going to come back and retest it at some point, Ryan, right? So
Yep.
that's when, if it blows through, you get out of it, sit on your hands, go find another market, right? Come back to this thing later on when it comes back and retests it, tuck it away in your head. You have to have a good memory, right? You have to
So
have a good memory when you're,
so like Bitcoin went and came and retested that 69K high, kind of broke above it at 75, came back down. You think when it blows back above it this next time and say it goes to 85 or 90, we're going to come back down and kind of reconfirm on that 70?
um, yeah, I would say that's a good way to go about it, right? And, you'll know when you see the formation come. Like right
Mhm.
now, what we need to do is see some time occur. The problem is, look, Bitcoin it's a unique thing, right? I mean, we've never really seen anything like it because
Yeah.
it's tied to so many different things. So, for me to say, well, it's going to be just like wheat or it's going to be just like gold, I think is foolish
Yep.
because, it's its own animal and it should follow these same kinds of patterns, but it's going to beat to its own drum. Every market beats to its own drum, and these
Yep.
harmonics pick up on that. So they're not like, I'm not taking the harmonics from gold and putting it in copper, right? I mean, even
Mhm.
though there's a correlation there, they're different, right? Copper is more of an industrial metal, gold's more of a precious metal with a very little industrial component. So I wouldn't use the harmonics on those, but I can show you something cool, right? Let me
Mhm.
show you something kind of cool here, right? So here is the silver market. Oh, I'm already on the silver market. So so Pete and I called this market, right? We had a target here. So let me show you what we've got here. This is a harmonic structure. Let me not put the cart before the horse here. So these pink lines here, right? This is our breakout zone. So this is where the energy should build. Now, remember, these are futures markets, so they kind of expire and for people who don't know what futures markets are, is it's a so just here's the best way to explain it is, let's say that you're a farmer, right? And you're farming, and it's springtime, and you're going to plant soybeans. And you buy your soybeans, you buy your fertilizer, you buy your gas, right, for your tractor. You do all this stuff. The day comes to plant your soybeans. You get out there, you plant your soybeans, and then you say, okay, if everything goes well, or let's say that the prices are nice and high in soybeans, and you don't think that they're going to be that high in the fall. What you can do is you can actually go into the futures market, okay, out into the future, and you can sell your crop, and when you're going to harvest it in, let's say, August or September, right now when you put it in the ground. If it's high, if you think you're happy with that price, you can lock it in, right? So that's what the futures markets were really there for, was to, be this way of locking in things. So if you're a gold miner, right? We could get into some cool stuff here too. But if you're a gold miner, you're pulling gold out of the ground. If you can, pull it out of the ground for $800 or $1,000 an ounce, but you know that it's sitting at $2,100 an ounce, right? What are you going to do? You're going to sell that 2,100 all day long, lock that profit in, and you're going to make that $1,000 spread all day long, right?
Mm-hmm.
So that's why we see these markets get suppressed, is because these producers go into the futures market and sell against it. Kind of like what I was talking about at the beginning with Bitcoin, right? You buy the Bitcoin physical, right? And then you use the futures markets to trade around it, right? Like the pros do.
Mm-hmm.
Well, anyway, so hopefully that gives you an idea. So what we do here,
thank you.
this gives you the harmonic structure, right? So these pink lines in the shaded area, this is our harmonic zone. Okay, so what we want to see is the market bounce around in this zone. Okay, but the problem is this market's expired, and we've already rolled on to the May futures. This was going on back in October, November. Okay.
Okay. Yep.
So all that stuff's expired, right? So that's why we see it drop off here. And what I'm looking at here, if you'll see, it's a little different. I'm looking at 5,000 flat tick charts. Okay, so this is that volume bar that I'm looking at, not a time-based bar. Okay, and what that does is it's a lot to get into here, but the point is, Pete and I were calling for this 2214 on Market Ultra, right? And that was this bright green line, right? So we watch this thing, and you can see the reactions. Right now, it's not so clean because, again, this market's rolled, but you can see a couple reactions here, right? In this dark green's the halfway line, and the bright green's the full objective. So like I was talking about the halfway, it's a lot of great things happen there, those gaps, right? But you can see these two moves back up to that halfway, right? And then we, and the move down into this full downside harmonic, and it hit a bottom. And we were on with Dr. Kirk. I don't know if you know Dr. Kirk or not. You ever see him out there? He's a silver seller. He sells silver.
I think it sounds really familiar. I probably would if I saw him.
Yeah. So he comes on our show every once in a while, and he sells gold and silver. And so I was giving him these levels, and he was pretty excited about them. Anyway, what's great about this, Ryan, is this, right? Is that we were able to call a bottom at 2214 in silver, right? And again, you don't know when it's there, but you're like, look, this was my target. If I'm short, I'm going to be buying that back for sure. And if I want to get long, this isn't a bad place to give it a try, because if I'm wrong, I know where I'm wrong, and I can get out pretty quickly, right? If it starts breaking 2214. So we never know what's going to happen next, but we use these harmonics to say, okay, we got our target, time to get out, gets rid of the greed, right? If we want to get long and bet on it going up, then we can say, okay, it takes out some of the fear, right? We take out the greed, we take out the fear, now.
Did that give you a little wick down there too? I can't see you got a bunch of stuff on the charts, but it looks like it kind of was one of those longer wicks just right down really quick.
It spent a little bit of time down there, but it wasn't a long time. So we had, this one was a wick. It didn't quite get there. Then we went all the way back up to the halfway. Then we worked our way down, and you can see the reactions to all these. So these are all the harmonic levels, these blue and light greens and blues, but the darker ones are the more important ones. And the other ones just help us monitor the structure as it's unfolding. So I'll strike. I mean, at some point we'll do that, but like this, I would strike a line right there. There's a reaction. Here's a reaction to this harmonic, right? Here's potentially another one, but you can see what we do, right? We just monitor this harmonic to see if it's actually active and it's working, right? And that's why we use these inner 1/8 harmonic levels. But we hit this bottom down in here, right? And check this out in gold. Here's what's great, right? Wrong one. So here's what's great is, let me see if I've got this on a good.
That's crazy. You know exactly 25 is gold, man. You definitely put thousands of hours in on this. You have 50, 60, 70 pages open up there. Holy shnikes.
Yeah. So here we go. This is it right here. Yeah, this should be good. This will give it to us. There should be a cleaner one than this.
So
when
how
you
many
see
trades? Go ahead.
So when you see them dash, that's an old harmonic level. So I call it a residual. It's kind of like if you throw a rock in a pond.
Mhm.
It's pretty easy to manage the ripples going out the first time to the shoreline. When they bounce off the rocks and the shoreline and they come back, it sort of gets muffled. You know, it's not as easy to perceive. So it's kind of the same kind of a thing, right? You know, but we still hold on to them because they can be valuable. If I have to, I'll go to that one chart, but I think I've got one that's clean here that'll be better.
And how many trades are you in often? Like you taking a trade a day, a trade a week? Do you have a set like a?
I usually have so I'll have like a long-term trade, 2 or 3 long-term trades going, and then every day I kind of go in and try to buy and sell around those. Like I'll
What's
wait
your
for
what's a long-term trade for you?
you know, like I mean, Bitcoin could be 20 years or something, right? Or
Okay.
50 years, but like gold, it depends. I mean, so
Well, are you holding your physical, like, are you self-custodying your Bitcoin, or are you getting exposure to it through an ETF or through
yeah,
like
it's
a
just in a
central?
Faraday cage sitting on a storage drive, right?
Is it really?
Right?
Yep.
Yeah,
Good for you. Good for you. Good for you.
yeah. And I don't think it's ever been traded. So that's what's kind of nice too, is I don't think it's ever really hit the ledger. So that's nice.
Smart man. Smart man. When did you first get into Bitcoin?
Um, Probably about 2017, maybe 2016.
Good for you, man. Good for you.
I mean, I watched it, you watched it early on and, you
Mhm.
saw the craze, but I didn't understand it, right? There was so much that I didn't understand about it. So I didn't,
Yeah, I was right there with you.
but back then, I mean, can you imagine? I mean, to put $10,000 into it back in those days, I mean, how great would that have been, right?
Man, when I first got started mining Ethereum, it was $2.64.
Yeah.
And I had one computer that was mining me 3.5 coins of Ethereum a day with just a basic computer with two graphics cards in it. And at the time it was, like $7.50, and I was paying like $3 or $4 a month for electricity. So I was really making like $3 a day. It wasn't crazy, but in my head it was an employee, right? And it was an employee that I was paying $3 a day, and it was making me $7 a day in profit. So it was seemed like a no-brainer to me. I just kept building more computers, and I just couldn't figure out why I kept building more computers, but I wasn't really mining more Ethereum. I didn't realize like that the network difficulty kept getting harder. So like as more miners were coming on, they couldn't pay us all out this so much Ethereum every day, right? So it kept getting divided and divided and divided. Next thing I know, I had 5 computers running, and I was still mining basically about 4.5 coins of Ethereum a day. And I was like, what, this game's rigged, man. I'm like making videos on YouTube talking shit about these mining pools, saying they're fucking rigged. And like, back then it was funny because like no, all my videos don't have any comments like, dude, you're a fucking idiot, bro. Like that's what people should have been telling me. But like I was one of the only ones out there making how to mine Ethereum videos. So I guess nobody was telling me I was an idiot. Fucking
It's
my
funny.
apartment, I had a condo, and on the second story condo, right? So I'm in the upper unit, and I plugged this first miner in, and it's, December out of 2015. And I plug this thing in, and I'm like, man, this is sweet. Like I don't have to have the heat running. Like this thing's so freaking hot that like I had my door wall open in the middle of winter, and it was heating the whole house. And I was like, oh man, this is brilliant, and it was great until I had 5 of them running. And then we got to spring, and the first day it hit 70 out. It was like 102 degrees in my condo. I came home, and it was like a freaking sauna in my house. So me and my dad went and converted one of my walk-in closets. We had cut a hole in the roof. We put one of those giant like industrial size exhaust fans that you see in like you go to the beach, and they're like the giant ones inside like the outhouses. We put one of those in the roof of my master walk-in closet, and we cut a big hole in the door and put a fan in it. And by that time I had 20 different, I had one mining computer with 20 graphics cards running on this thing. And they run, back in the day that you didn't have like the overclocking or anything to like cool them down. They just basically freaking ran. And then by the time I got all 20, man, it was, no matter what I did in that condo, there was no keeping it cool. Even having them inside a walk-in closet with like that room, having the window open, air coming in, going out the exhaust, and then having another door to that room shut. Even with the AC on at like 65, I mean, it would be like 75, 80 in my condo. And it was like, it just wasn't feasible. But anyways, I'll quit talking.
Those are great stories. That's funny.
Yeah.
That's funny stuff. So here's the thing on gold. Let me show you this real quickly here. And so the difference here is this one right here that we're looking at. This is the June contract. So we've rolled, right? So it still says April just because I haven't changed the text on it. But the contract up here is GCEM, and M is for June. So 24, and it's 288. So that's basically 4 hours. So if I flip over to this one, this is the April one. So this is the one where we actually had the harmonic signal. And so, and it came in on, I want to say it was right around in here, the end of the year. So this was like 12. So we would have gotten this signal right around in here, right? And so what we see here is, and I'll show you what I mean when I, we're making sure the harmonics are working. So you can see right there, we hit this so these pink lines inside this pink channel is the breakout zone. You can see we broke out down here, went down to the 1/8, this light blue line. We almost got there, right? Then we came down here to the 2/8, back down to the 2/8 again, right? Here, we're testing it.
Yep.
And then we come back up. Guess what? We come right back up to the upper breakout, right? We come down here and mess around with the 1/8. You can see a little bit of, you could see it kind of testing these levels. It's kind of messy right there. There's one that's hitting. We almost get down here to the downside halfway, right? This dark green line. You can see another retest here and another retest there, right? So we just kind of go through and here, this one's a good one there too. So a lot of times what you'll get is what you're looking for is the top and the bottom of the swing, right? So in this case, what we'd like, I won't get into that right now, but the point is this, we blow right through this whole thing again. Okay. This is kind of a messy signal, but to show you how great it worked, right? Here's the halfway. Okay. Not a gap through it, but we definitely hesitated there. But look where it stopped, Ryan, right at the harmonic again. Okay. And we just tested it again on the April contract, right? Now we spiked above it here, but here's what happened. So I can show you this. It might be harder to show you now. But I'll run through it real quickly. So the futures markets open up at 6 o'clock East Coast time. So what happened was this gap here that we see, or this spike up through here, that guy right there. What they did is at 6 o'clock, they came in and they lifted it right out of the gate. So as soon as that futures market, so what they're doing is they're distributing, right? So you have to know what's going on. You have to understand the market structure. So they come in when the volume's light, and they lift it because it's cheap, right? It's cheap for them to lift it. They shake everybody loose, hit stops, right? And not only that, they want to suck people in when Japan opens up at 8 o'clock, right? Japan's going to open up 8 o'clock, East Coast time, 8 a.m.
They're trapping you in there.
And they're going to try to pull people in. And then Europe opens up and they're going to pull people in, right? And then they try to, and then the whole time they're selling, right? And they might have to come in and prop it a little bit, but then they're selling. Every time they can sell, they sell. So that's what they were doing here. And then they whacked it, right? And I knew it. I smelled it, right? And so I can show you. Let me see if I can actually show you the spike here so that you can see it, because it's worth taking a look at. I mean, this is for people who are fascinated by this stuff. It's worth taking a look at. This is it right here. So, and I must have marked this because
I've already marked that.
So this was 5 o'clock. So let me mark 5 o'clock here for you. So 1700. So right there. So right there is where the market reopened up, and they just shot it straight up, right? And then look at this back and forth until about 9:30 a.m. So about the time the stock.
There they go.
And sure enough, as soon as all the eyeballs are on it, look at that, and you can tell what's going on here. They run it down, they run it back up, they run it down, they run it back up, run it down, and then as soon as they've got eyeballs on it, the stock market's open, everything else, they came in and they just hammered it, right? And then a little bit of a bounce, hammered it again.
It almost looks like they built a bullish pennant over there too, trapping people in there. Right before they broke down. Is that not a bullish? Do you trade patterns like that as well?
I do. Yeah, I love pennants. So check this out.
Like from that spike up there, that pennant there, and then all of a sudden they broke it down right after, if I'm not mistaken.
Yeah, you're right. You're right.
It looks like it was they were trapping people along there, like they built the perfect formation for a perfect pennant there, and then
let me draw that because I think I know what you're saying. So like this, right
Yep.
there. And then maybe we take it off of
Yep.
this,
Exactly.
something
Yep.
like that. And usually what I like to look for is the apex where they come together. That's when you know a
Okay.
trend's defined. So for
That's when
instance,
you know what? What was that you said?
well, a lot of times that's when you know like a trend. If it stays below, when this apex comes together, if the market's
Mm.
below that, then the trend, there's a good chance, a high probability that the trend is actually down. Right. So
Good. No shit.
yeah. Yeah. A lot of times. So for instance, take a look at this. I was going to flip over to this to show you this, right? Because this is kind of fascinating. Um, let me see where that's at. Here we go. No.
And
Yeah.
is it always a bullish pennant if it makes that shape, but it came from, it came from lower and went up and then built that pennant versus that would be a bullish pennant, right? Or am I saying that wrong?
So what are you referring back to the gold, for instance, or
Yeah, well, like that one. But can you squeeze it in a little bit so I can see what was before it? Like just
you go back
like
to the
no,
gold?
zoom the chart this way so I can see more of the candlesticks to the left. Yeah, there we go. Okay, so yeah, see how price is coming down, right? From that where it says 2011 at that peak.
Yep.
Like right, price came down and then it built that pennant there at the bottom of it. Would that be a bearish pennant? It's kind of hard to show you on that chart. I could show you on the gold one if you went back to the gold one. What I was saying, it doesn't really look at it like it on that one, but
Yeah.
you pull the gold up real quick. I'll show you what I'm saying. So see, it's like where the first start at the pennant is, where you draw that first line.
This one
Right
right
there.
here.
Yep. But like price coming down below that, right? It came up and then it put the peak of the pennant in, right? Like price ran up from, was it 21,700 all the way up to 22,400. Like if you draw a straight line down from the left side of the pennant.
So over in here.
Yeah, to go at the top, you just draw a straight line straight down, right? Because that's where you make your leg of the pennant, right? Like your post. Yeah. So that your post is, so you see what I'm saying? Price is coming up. So that would make it a bullish pennant, right? Or no?
Yeah. I mean, yeah.
Or is
You
that a
can look
bearish
at it
pennant
that
too?
way. Well, I don't try to be biased too much. So what I try to do, Ryan, is I like the fact that it's converging because it's kind of like we were talking about with the Bollinger Bands and the Keltner channels. And
Mhm.
those Bollinger Bands go inside those Keltner channels. It just tells you that there's going to be an energy release. So I don't try to get too caught up in bullish or bearish pennant. I just like the fact that they're converging, and it tells me that that energy is compressing. Right. It's
Yep.
kind of like, when we breathe, right? We breathe in, we breathe out, we breathe in. Markets do the same thing. They kind of breathe. So I don't really try to get caught up in whether it's going to break on the upside or downside. What I try to do is watch the market structure and I try to feel what's going on. So this is where, it's the sixth sense, that you try to
Mhm.
bring into the equation. And you just, after doing it for so long, you're like, okay, what are they up to here? You know what I mean? Like,
Mhm.
is there market structure going? Is there a harmonic here that they can't beat? So
Mhm.
for instance, when we go back to this gold, right? Like I know that it's going to be very hard for them. Where did we have that? Was it this one? Kind of lost my perspective here. Yeah, this one. So in this case right here, when we got up here to this 220180, right? I
Mhm.
was pretty comfortable being a seller, and so everybody's you could say, well, it's formed a head and shoulders now, right? But the problem is this April contract is now expired. So even though this thing came back up and hit perfect right on that
Mhm.
220180 again today, that was
Yep.
today or yesterday or today. Looks like today. The problem is we're on this contract now, right? But you got to sometimes flip back and forth. So today, look, it spiked above again, right? That was that same move, just on a different contract. Does that make sense?
Yeah, yeah, I get what you're saying, but it's just so weird to me that you guys trade in contracts and not just,
Yeah. Yeah,
like
I
I
know.
just want to open a short. I'm either long or I'm short on the market. Like
Yeah.
they have the futures too on the same exchanges that we trade on, but those things I'm always confused. I'm like, why would anybody trade a future versus just like I think the market's going up, I'm going to bet long on it. It's going down, I'm going to bet short on it. Where like the futures are I guess I'm still confused on how that works versus just long and shorting, but I'll pick
Well,
it
so
up
what'll
eventually.
happen is, let's say that you're short a market and it rolls, right? So what all it means is that the volume's going out of the April contract, right? So no one's going to trade it anymore and it's going to expire. In the June, all the volume's going to roll over to the June contract. So just think of it as
Yeah.
like a 3 or some month rolling window. So as soon as that contract kind of is done and cooked, then you'll move over to the, so what you'll do is roll it. So you'll just buy back to April and then you'll go back into the June and sell it again. So you're still so you're still short. You just have to roll your position over. Does that
Does
make
it
sense?
cost you money to roll it over?
Yeah, it does. I mean, you have to pay a commission on it. Yeah.
Okay.
So it stinks. I mean, but if you're
What
trading
are your
enough, yeah, what
what
are
are
they?
yeah, what are your commissions? Like if I open up $1,000 short or $1,000 long, what percentage am I paying to open that
Yeah.
trade?
So if you open it up at like, there's a couple places, if you're interested, I could, get you
No, I
connected
don't
to.
fuck with regular markets, but I'm curious.
Yeah. But you're probably like, with a small account, you could probably do like $3 in and out full turn
But
on
it
a
doesn't matter
certain.
the size of my position?
Well, no. So what that would do is, in this case, it would give you one contract on that was 1,000 ounces. I think it's 1,000 ounces on this. I forget. There's so much stuff to remember, but
No, I
I
don't
can
blame
tell
you.
you. Contract spec. Here we go. So you're basically 100 troy ounces. So that's what you're trading. So essentially, you're controlling 100 times 2,100. So what is that? 21,000, 210,000. So with $2,000 of margin, right? You can control $210,000 worth of gold, right? And it's going to cost you, let's say, $5-6 to get in and get out, to buy it and sell it. But you're
And
controlling 200 and some $1,000 worth of gold, right? Which is a lot of leverage if you want, right? There's also
so what
mini.
happens if I get wiped out on that trade? I'm just out my 2,000?
Yeah, they'll close you out, or you'll manage your risk so you don't lose $2,000. I mean,
What is what are you you're turning 2,000 into 200,000. So you're using like 10x leverage?
yeah, that's the way it works, right? It's kind of like Forex markets too. You post a certain amount of, so you put up
Collateral.
2,000, collateral. So you put up $2,000 and then they let you trade that contract. It's worth 200,000. Now you could have 40,000 in your account, right? And use that all for gold and you could delever it with more money, right? But what I'm saying is the minimum amount you could do, you need $2,000 to trade that big contract. Now they also now offer a smaller contract, which is kind of nice. So it's $200, right? So it's 1/10 the size. So therefore you're controlling, $20,000 worth of gold for $200, right? So it's the same ratio. Now you
And
could have
then
5,000 in that account and you could delever it with more money, right? Does that
yep, I
make
see what
sense?
you're saying. Yep.
Yeah.
Now and then on that trade, you're paying capital gains tax every time you open and close that trade?
Well, here's the beauty of it. Is that with futures markets, it's still in the tax code, right? Is that you get a 60-40 short-term, long-term capital gain split. So you actually get to keep 60% of it is long-term capital gain and 40% of it short-term capital gain. So it's actually pretty good. Right? It works out. So even if you trade it for 1 second, 60% of it is long-term capital gains.
60% of the profit or
Yeah. So
okay.
let's say you trade it for 1 second, you make $1,000. Well,
Yeah, you
so
keep it.
$600 will get treated as long-term capital gains, and $400 would get treated as short-term capital gains. So it's not bad. Works out pretty good.
Yeah.
And
I
it
mean,
doesn't
I
even
think it's
matter.
always
Like,
bad when you're giving gun money to the government, but I get what you're saying.
yeah.
These bastards don't deserve a gosh damn penny. And it just makes my blood boil knowing that they're fucking taking our money trying to kill us.
Well, Pete's on the crusade now again, no taxes.
Yeah. Yep. I seen that. It's funny. It's like, we're not going to pay our taxes. I agree. I mean, you're funding your own demise, but when they control the money printer, they just going to print it, brother. Until you start fully adopting the Bitcoin standard and completely withdrawing from that corrupt economy, as long as they got control of that money printer, sorry, dude, they're going to print your family into poverty.
Yep.
So talk to us. I know you finish up what you're doing here and then show us the dollar because I know you wanted to talk a little bit about the dollar. We go for maybe another 20 minutes or so and then we'll wrap it up.
Okay, sounds good. So this gives you a good idea. So what I wanted to show you with the silver and the gold is this, right? Let me flip back to this, right? With the silver is that. So what's nice here is that we called the bottom at 22.14 in silver, right?
Mm-hmm.
And now we have the high in gold, right? And again, this is that April contract. So even though this is basically rolling off the board, right? It's going away. I still look at it until it's totally gone because the head and shoulders, right? We hit it once, came off, went through it that second time. Remember, that second time was a scam, right? That was when they manipulated higher so they could distribute it.
Yep.
And then the third time we hit it again. But very few people are looking at this anymore, right? Most people move on because they don't have harmonics, right? They don't have the harmonic structure. So they're like, why do I want to look at April contract when the May or the August or whatever contract's most active? So they don't have that perspective of the harmonics, right? But in this case, we do. Market Ultra does, right? We have this. So that's why I still look at the April right now. If I roll over and I look at if I go here and I look at the, where's our June contract? This is our June contract. But see, it spiked above here, right? It spiked above here. So you have a totally different picture and it spiked above there. Now, does that mean that the 22018 isn't still effective? No, it just means that the June contract is telling us a slightly different story. So we want to watch this closely. You can still see it's coiling up around this 22018, right? You can see this down in here. See how it's coiling up in there? So, that's where these so the truth is here, right? The truth is here in the harmonics, right? But the manipulators are going to do everything they can to get you on the wrong side, just like we saw in those little wicks in the Bitcoin when we were looking at them, right? We were putting together the symmetry, right? Those different symmetric moves. So this is where you get that sixth sense, and you're watching this closely so you don't get fooled, right? And you're looking, and for me, I like the short side in this because I don't know of anybody who thinks gold's going lower, right? And this will roll us into the dollar, right? And why is this? So, so much of the world's trade, right? Gold goes through the COMEX exchange in New York, right? And there's only 3 big gold, exchanges across the world, as far as I can tell. I mean, maybe there's someone else that's coming up, and there's lots of exchange popping up out of the woodwork too. There's one we covered in Market Ultra. I can't remember the name of it right now, but anyway, you've got, the US, COMEX, you have London Metals Exchange, and then you have Asia, right? You've got one over in Asia, or 1 or 2 over in Asia. So the key here is that just like all this money has to flow through the dollar through crude oil, right? The petrodollar, right? Has to flow through the NYMEX exchange if it's West Texas Intermediate. We have the Brent crude that flows through the London markets, but most of it flows through, right, the NYMEX exchange. So that if you're a small business owner, you understand the idea of cash flow. So this gives the US a lot of cash flow, right? All this money that flows through that NYMEX exchange, right? It's just, even if you're making money or losing money, right? If you have cash flow, you can sort of keep going for a while, and so when we look at this, these markets tend to go down, right, when the dollar goes up. Does that make sense?
Yeah.
So crude oil tends to go down. Commodities in general tend to go down when the dollar goes up. And there's a lot of different ways of looking at this, but the real phenomenon is that, as the dollar goes up, somebody else's currency can't buy as much of something, right?
Yep.
And so there's a long story in that, but I think most of your listeners probably get that, and you probably get that, that there's constantly, a currency play here, right? That's always
Rockabilly in the live chat says, yeah, dollar's looking strong. I watched it on Pete this morning. So I got some people in here from that were watching you guys' show this morning.
Okay, cool. And who is it? Rockabilly?
Yep.
Nice. Okay, I'll have to remember that name. All right. So let's just roll over to the dollar and take a quick look at this, because we've got a new signal in here. It just came in. Let me get the old one. Make sure I've got the right.
Now, you trading the dollar on futures as well?
You can. I tend to trade the euro and the Swiss franc.
Okay.
There's a long story behind that, but I could probably briefly cover that. Let me see if I can find. Boy, I just rolled over a bunch of markets today, so it's hard to find this one. Wonder if this is it. No. Well, I apologize.
I had another trader on here last week that was very, very well, like very, very good. And I really liked his style too. So this is really cool. I love learning from everybody, man. It's like every time I interview a trader, it's like everybody has such a different strategy. But
okay, here's the one I was looking at right here. Okay,
Mhm.
so this is an old harmonic structure that we've had floating around for a long time. And you can see these markets, this dollar's been pretty much sideways for quite some time. And again, you
So
know,
hold on, pause there
go
for a
ahead.
second. On the right, I'm seeing 1,400 or 104,544. Is that $1.04 or
Yeah.
what are, yeah, okay, okay.
So it's a dollar four. And so what that means is, so the way that this dollar is built is there's a basket on the other side. So think of it again like a teeter totter, right? You got the dollar on one side, and then you've got a basket of currencies that it's plotted against, right? And that's the euro. Let me
Yen.
think the next biggest one: euro, yen, British pound, Australian dollar, Canadian dollar, Swiss franc. I think we have one more of the the Nordic ones. I think it's Sweden, maybe Swedish krona. I think that's it. So essentially, what happens is the dollar's poised against that basket of currencies. And
Mhm.
the euro is the biggest one. It's like 50 some percent of it. And the other ones make up the remaining 50%. So the euro
Yeah.
is the big one. So the thing that people forget though is, the beauty of the dollar is that even though, I mean, look, the US has got lots of problems. I mean, none of us are going to disagree with that, right? We got debt and we got
Yeah.
goofballs running the place, right? We can't follow, we have no
Long
laws,
show.
no rule of law, right? We got all
Yep.
kinds of issues. But that being said, you know, even with all that, right, the dollar's still holding up, And so how do I know that? Because look, I've got this harmonic structure again, right? So I have this pink shaded zone, right? And I've been watching this closely, and you can see, all these little turquoise circles are all reactions to these harmonic
Yep.
structures, and we could probably even draw more of them. Like there's one we could throw in there, and we could.
Mhm.
The point is, we got above it, we came back down, and we retested it just this week, right? Now we're starting to make progress. So could we go to this halfway harmonic up here,
Yep.
at
5.
105.35, or could we get it to 107.08? Right? It's possible,
Mhm.
and and the thing is, these currencies have been going sideways for so long that they're going to trend, right? It's like we talk about, whether it's, and
Mhm.
you can see it. If I look at this here, we have our same thing again, right? We've got our structure. Okay, we've got our converging. We can call it a pennant, we can call it a triangle, we can call it whatever we want. But it's pretty clear since 2000, this thing's been building, right? 2000 there, 2008. Remember that was a real estate crisis down
Sure
here.
do.
And then we have all these points, that I've marked on here, 2016, right? We've got probably COVID here. I'm losing my time here. So let me,
Yeah, it's
there,
pretty
we
close
got
to
time
COVID.
now.
Yeah,
There we go.
21.
So there's COVID, the COVID low right there. And then we spiked up pretty big, took out a bunch of highs, and look where we're at, right? And look where this apex is. Remember, we were talking about the
Mhm.
apex. So there's November of 24. What's going to happen in November of 24, right? What's going
Yeah.
biggest election of probably the history of the world, potentially, right? Are we
Without
going
a
to be able
doubt.
to, yeah. So the key is if this price action can stay above this apex, remember how I
Well,
said once
yep.
the apex comes in, if it's above that mark, if it's above the apex, that can be the trend, right? So can this thing, again, remember, we're building all this energy, right? Look at our Bollinger Bands. We got our red inside our
Yep.
white. Okay, so we're building, so we got everything we need here, right? We've got this converging triangle. We've got these Bollinger Bands building energy, right? We've got all the things that we need for a big move to come out of this. We had one here. We had this same energy build back in here, but all it did is propelled us to the upper end of this triangle, right? It didn't break out. Usually it's a subtle one like this, right? Sometimes it's like the big one like we saw in wheat, right? Two or three or
Mhm.
four times in that weekly, we saw that thing building. But in this case, this is kind of a subtle little, energy build going on right in here, on these.
Yep.
So if we get to this apex and we hold above it, right, this dollar could be off to the races. Well, why now we take that structure, right? We and we have these harmonics in here, right? So if we look back at our
Mhm.
harmonic, right, we're above this pink shaded zone. We
Yep.
know what our targets are, right? So just like we saw in silver, we hit
Yep.
2214. Just like we saw in gold, we hit 220180, right? And those aren't coincidences, right? I mean, for anybody,
Mhm.
for Rockabilly who's been following, I mean, if he's been following us since, September, October, November probably is probably when we really started. If he's been following us since then, like he saw us call the silver, the crude oil, the gold now, stocks were tricky. I mean, I got fooled by the stocks, but we don't have time for that. I can guarantee
Mhm.
you, not tonight.
Mhm.
But the key is if this thing starts to break out, right, we start to go above this prior high here, this 2/8 level, right? That's that
Yep.
light green line. If we start to break out, you know, we could be off to the races. And let me just roll this over so I can show you real quickly. I got to show
And
you this now.
yeah,
If we got,
and will you show me like on so like you're showing us all this stuff on the chart. Where was your entry position? Like what gave you the signal? I see that you have an idea of where price is headed, but where was the entry point on that, or what was your confirmation that you were like, okay, yep, this hit here? Was it that bounce at $1.03 something? I can't see.
yeah. So this is, we love this, Ryan, right here, right?
Yep.
We love this. We love when it comes down to that upper breakout and retests it, and then it starts to do what it's doing right now. So this is a
And
very good, this little move up is pretty big right here. It's pretty
yep.
important.
And
Now,
what is
it could
your
break down. It could break back down below this thing, but at least if we bought here, we can get stopped out around this white line, and it's not a big deal. We're not going to get
that's what
burned.
I was gonna ask. What is your stop loss on a trade like that? What percentage
This
would you say?
in this particular case, I'm going to lean on this white dashed line, the middle of this
Yep.
breakout zone, right?
Yep.
If for some reason I'm like, quote unquote, in love with the trade, I might let it go to the other side down here to this, down in here, right?
Now
That's it.
what is your percentage wise? Like if you put it at $1.03, are you going down? What is that white line? Is that 0.2%? Is that 0.5%, a half, 1%?
I don't know. I don't really go by that. I just go by the harmonics, right? I don't use the percentages. I just use the structure. Does that make sense?
Yeah, yeah, 100%. Yep, I get you.
Yeah. So, in this case, right, usually this, I think, was a monthly signal. Usually a monthly signal is going to be somewhere between 7 to a 12% move, right?
Hmm.
Usually, generally
Hmm.
speaking. So that means from here to here is a 12% move. So, you can figure that this is about, I don't know what, 4, 5% stop, maybe. I don't, 1%, 0.5% stop, maybe. I don't
Hmm.
know. That little guy right there
Yeah,
compared
it
to
doesn't
that.
matter to you because you're just going off harmonics. You're either in the trade or you're out the trade because
And for me, all I care about is keeping my losers small, right? Which I'm
yep,
doing. See that little guy, and my winner's big if I
yep,
get it right. So I like this proportion. I like that little loser versus that big
hmm,
winner, you know.
yep,
So I got to
yep,
show you this. So let's flip over. So I didn't trade the dollar, right? Like I just use this for reference because the dollar is the world reserve currency. So you got to watch it, right? In my opinion, this is the most important market that's out there, right? Because it tells us the truth, right? We hear all the time the dollar's getting destroyed, the dollar's getting destroyed, the dollar's getting destroyed. And look, there's all the reasons for it. I get it, right? But same thing when crude oil went down, when Hamas invaded Israel, there was good reason for crude oil to
mhm,
go higher, and it didn't. It got crushed, right? And it was the
yep,
biggest move. I mean, people got destroyed in that trade, right? I mean, it was like massive volatility out of nowhere. I mean, a lot of option traders got smoked in that trade. So here's the thing. Let's take a look at what I am trading, right? So I can show you this. Here's the euro, and I like the euro better because um, one, it's more liquid. It's a very liquid market. But yeah, this is the one I wanted to show you. Okay, so this is a lot like that converging triangle that we talked about, but not quite. And you could probably draw one here too. There might be something here if we wanted to draw it from here down, right? There's a good chance. It's
yep.
not super pretty, but you know,
It's like a falling
right.
wedge or whatever they call it.
Yeah, you could do something, and that we'll leave it on there because there's something to it. But
Yep,
here's what I really like is this upward sloping channel. So this is typically a bearish situation, right? When you get these pink lines. Okay, so this isn't harmonics. This is just me doing technical stuff on here. And let me
yep,
clear these. Let me clear this stuff off of here so it's less confusing. But what I like about this is look at this, right? Okay, so we have this, and it probably connects to this too. I'm guessing it would probably connect to this. I just didn't draw it there. We get a gap down through it, so no hesitation, noted, right? And then we get
hmm,
these, right? We get all this stuff. We get this
hmm,
retest here, and then we come up short, right? We come up short in here. And so look at that. If we do want to use that trend line, right? There's some legitimacy to
yep,
that. Okay. And here's what I really like, right? Is the fact that it came all the way back up and it retested that lower upward
yep,
sloping channel and it held. So I like this. And look at how it's consolidating, right? It's almost
yep.
like people are in trouble, you know. And look what we have here too. Look at our Bollinger Bands. Look at that energy building. You see that? The red inside the white,
Sure do.
right? So we got lots of energy. Now let's flip over here to the Swiss franc, right? I like this one even better. So this is the Forex market.
Hmm.
So this is kind of the big one that the institutions use. Let me make sure. Oh, wrong one. Um, yeah, I got the wrong one there. Okay, so here's the Swiss franc, and let me expand this out just a little bit.
Is this what you do
Okay.
for a living now? You just trade full time for yourself?
Yeah, I have pretty much for, since 2006 or 2008. I mean, I did a little bit of like hedging for some energy companies and Canadian energy companies. And then mm, got involved in some big farming operations out in Nebraska for a while. And that was long, long stories, but anyway.
Yep.
But here's the thing, right? So here's a Swiss franc. So this is all the way since 1970, when the forex markets basically first kicked up, right? So this is since this back here is 1970, right there at the top.
Hmm.
This thing has been, so the dollar, right, has been falling relative to the Swiss franc, right, this whole time. Does that make sense? So it's the dollar to the franc. So when
Yep.
it goes down, that means the dollar is falling to the Swiss franc.
Yep.
Well, what were we talking about at the beginning, right? Swiss franc, right? A lot
Yes.
of nefarious activities flowing through Switzerland. Even though the people of Switzerland are great, a lot of
Yeah.
the activities that go on in Switzerland aren't so great. So if we're gonna blow this whole thing up, right? The whole global cabal, right? I think a lot of them are residing or running their artwork and all their stuff through
Yep.
Switzerland, right?
Yep.
So
Agreed.
here's the thing. So this thing's been downward sloping. We have the same kind of a thing building, not quite as pretty as some of the other ones, but I've got these, these kind of sloping to the downside here, and then we've got this base building down here. See that purple one down at the bottom?
You sure do. Yep.
So again, here's our apex. I wish the apex was more aligned with November, right? Because that would make more sense, but it is what it is, right? There's the apex of this thing. This would only be a 50% retracement up in here of this high. So off of this high right here. So you're
Well,
talking about a market that's been absolutely pounded, right? It's been
we're,
pounded for, 60, 50 years, 50 some years. And it's sitting down here at its lows. And look at that. Look at the red inside the white, Ryan. Look at that.
yeah,
See that energy building?
I sure do. I sure
So
do.
and
Now,
this
let me
thing,
ask you a question though. But
yeah,
what if
go
you
ahead.
pull, like, see that purple dot, not the one back in the 70s, the next one that's right above the red lines?
This one
Yep.
right here.
Now, what
Yep.
if you draw your you put your line and draw your line down on a diagonal angle down to where you're at? Like it seems like your light purple line is
I think I know what you're talking about. So if I do this, right, let me get it so it's parallel and then put it here. Is that what you're looking for?
well, I want you to go from that pink dot down to your other blue dot at the very bottom. Like I want you to draw the trend line going down from the peaks all the way down on an angle.
Like
Yes,
that?
but to your other blue dot. Yes, that one right there.
Okay.
Now you're gonna converge at November, closer to it, no?
May of 20, yeah, early 26.
Early 26. Okay, so you're still way past it.
Yep. Because it's a monthly chart. So this is a long-term perspective,
Ah,
right?
yeah. I see what you're saying.
Yeah.
Now, why did you like why is that purple line where it's at? I guess I should say because I see a peak there. I see the other blue circle as a peak, but you have your purple line kind of drawn.
Well, so what I'm doing is like these like lighter purple ones like these.
Yes, the big long purple one there. Yeah.
So what I like is I like to connect off lows and highs. So see
Oh,
me
okay.
back
I see
here,
what you're doing.
connecting
Yep.
off these lows back in here. And then
Yep.
I connect off this high. And and then what I do is I run this parallel one down here off of this one, right? And you can see I'm also connecting off this little guy right there, right? There's
Yep.
a little spike down there. So I'm connecting off of this. Um, so I'm connecting right there off that little guy right there. And then this high, and then you can say this one, right? Maybe, but then down here. So again, look, I'm grasping for straws to some degree,
Yep.
right? But you can see there's more than just I'm not just winging lines on here, right?
Yep.
The other thing too is, we've got a moving average that's coming in, right in here, this
Hmm.
turquoise line. It takes a long time to generate these long-term moving averages, but this one's starting to hug this upper channel, right? So this market, how long has it been since it's touched one of these longer term moving averages? I mean, it might be all the way back to here, even in the 70s or 80s. Markets love to come back, right? They love to come back and test a moving average, right? We can see that in the NASDAQ during COVID. We can see it, I mean, I could show you some spikes down that, just blow your mind. You're like, why did the market stop there? Like, and we know COVID was a scam, right? We knew
Yep.
that. We've known that for a long time. But the pretty much maybe a month or two, we got I mean, I think I maybe bought into it for a couple weeks, because I hadn't seen anything like that. But after a while, you start seeing stuff, and you're like, okay, this thing isn't just
Yep.
another scam, right?
Yep.
It didn't take us too long to foil it. But the key is, that I could see a spike out of the Swiss franc at some point up into here. What would cause that? It could be, again, we don't have to wait till the apex to break out. We want to be above that apex when it does
Yep.
break out. And I'm not saying my apex is perfect here. I'm not saying,
Yep.
I'm not claiming that I've got the apex, right? I mean, I just have the
Yep.
apex,
You just
so
get a ballpark where you're aiming at. I get it.
yeah. So, I mean, put it this way, if it goes up into this turquoise area and by
Would that mean
20,
that would mean the dollar is getting stronger against the franc, correct?
yeah, exactly. It would mean the dollar's getting stronger against the franc. And again, what's in that basket? The euro, the franc, the yen, right? The Canadian dollar, Australian
Mhm.
dollar. And the other thing to think about is the Canadian dollar and the Australian dollar are commodity currencies, right? Meaning that they're basically based around commodities. Australia offers commodities to China, Asia, around the world. So does Canada, right? And so,
What are those
if
commodities? You
what are the
know?
commodities they're connected to?
Yeah. Do you know?
So
I'm
so
curious what
Canada's
Canada is
connected
actually
heavily
exporting.
to the energy and natural gas, right? That's a big portion of Canada's GDP is energy based, right? And Australia is metals, a little bit of agriculture, but it tends to be a metals based. A lot of copper stuff comes out of there. So the point is that these currencies can be very weak. And look at the British pound. I mean, that's a whole other story unto itself. We can't really get into tonight, but that whole basket, Ryan, is pretty weak. So again,
Yep.
look, I'm not saying the dollar's great. I mean, we got a lot of issues, but here's one more thing to add into the euro, right? Is that, the euro doesn't have a common debt, right? So they have one currency for all those countries, and every one of those countries floats a separate debt, a separate bond. That's almost like pegs. When people peg, like for a while, the Swiss franc was pegged to the euro, and that blew up, right? Everybody
Yeah.
tries to. What's that?
Go ahead, keep going. No, I'm just laughing over here at this fiat Ponzi scheme we live in.
Yeah. So I guess my point is, I'm not sitting here trying to paint the dollar as some, like perfect entity,
Yeah.
perfect tool. But what I am trying to say is like everything else is worse, right?
Yeah.
Potentially.
It's a
And that's what
fucking
everybody forgets. We sit here in the US and we hear this on Bloomberg all the time and CNBC all the time, right? And even we do it, independent media, right? We tend to beat the dollar up, right? Because I mean, Dr. Kirk comes on, he beats it up, right? Because he's selling silver and gold. And look, everybody should own some silver and gold, right? I always try to, you know, eh, take this other side a little bit, right? So we don't get carried away here. You don't
yep.
want to, he says, I'm 100% silver. Like, that's great for you, but 5 to 10% is good for most people, maybe 20. You try to keep things in check a little bit, right? But
Yeah.
the the I'm just sitting here trying to paint the reality, the true picture, and so and what would make the change, right? Like we saw what Donald Trump did in 2016. I mean, look at the stuff he called out, right? I mean, things I had no idea about. I thought I was way on to, 9/11. I mean, I've been beating the drum on 9/11 for a long time, and people are like, you're a fool. You have no idea. And I'm like, look, there's no wing holes in the Pentagon. I mean, there's no way.
Yep.
Buildings don't fall like that. I mean,
Yep.
look, I'm a mechanical engineer. Like, don't fool me. You're not gonna fool me. So I've been on
Yep.
this for a long time, but here's the thing is that, he exposed things to me, right, that I had no clue about,
Yeah.
and so
100%.
if what is he going to do round two? I mean, and who else is, and, we could get into the Q thing and all this. And I mean, who knows what's really going on? I don't know. But what I do know is that, I do understand the markets to some degree, what I mean? And I am able to, I feel like, God's given me custody of this harmonic thing, and it's time to get this out to people so that they also can benefit from it and see the truth from it. And so I'm just trying to, say like, look, I get it. The dollar could fail, but as long as the dollar, let's go back to that real quick. As long as the dollar, as
Yeah.
long as it
You're just,
stays above this apex, you know what I mean? As long as it stays up in here, right? Like, and it doesn't fall below there. I mean, I'm not that worried about it. Now,
well,
you know,
and what I want to add on there, you're saying the dollar's value is based off its relative value to other currencies, right? So,
exactly.
like, it's not based off the dollar itself, the inflation rate, or your purchasing power with that dollar. It's just
Yeah.
based off of how relative it is to these other shit currencies. And even though we're fucking printing our currency to oblivion, as long as the other countries keep printing theirs into oblivion, it's like, wow, you're the fastest horse at the glue factory, you know?
That's right. That's
Fuck.
right. Well, and here's the thing, right? So in accounting, I don't know if you've ever done any accounting, right? But the basic equation is assets equal liabilities plus owner's equity, right?
Say that again. I want to write that down. What is that?
Assets
Yep.
equal liabilities plus owner's equity. Okay. So we know what assets are. We know what liabilities are, right? That's basically debt. And then owner's equity is basically your stored value, right? Your accumulated value, right? It's owner's equity, right? Owner's equity, right? So it kind of explains itself. But if we look at the US, right, we have $269.6 trillion worth of assets, right? We have $145.8 trillion worth of liabilities, okay? And we have $123.8 trillion worth of owner's equity. Now, what these globalists want to do is they want to leave us with the liabilities, right? And they want to take the owner's equity, right? That's why they were doing these natural asset corporations, right? That's why they're ripping us off. That's why they're trying to rip people off. Today we got cut short, but we did a thing on the Realtors Association, right? I don't know if you followed that, but they're screwing the buyer's agent, right? So you get all these guys coming out, Larry Summers and all these jokers coming out saying like, this is great, right? This fine that's been levied against, and this new change that's going to come through the National Association of Realtors it's great for the buyer because it's going to cut their costs. Well, no, it's not, right? It's a lie. What it's going to do is the buyer is not going to get representation because the seller's agent isn't going to pony up the 2.5% that normally goes to the buyer's agent, right? When you're buying a house, you don't pay the realtor, the seller does, right?
Yeah.
So what's happening is everywhere I look, Ryan, they're trying to rip us off. They're trying to rip off our owner's equity everywhere we look, right? So the key is, don't think Donald Trump doesn't understand assets equal liabilities plus owner's equity. And he knows exactly what's going on here, right? He knows how this works. He's a smart guy, right? I mean, look, he just increased his wealth today by $3.5 billion with his stuff. And we don't even know if it's going to fly or not, right? I mean, it's just, we don't even know.
Yep.
Right? It's only got like 6 million users or something, right? I mean, it's pretty small, but the key is, he understands the stuff and he's exposed us. So the point is, we still have a lot of assets in this country and we haven't given up all of our owner's equity yet. So, and the other thing too is, I could go on and on with this, but I'll wrap it up with this is, there's,
Now put yourself back on full screen.
Okay, great. There we go. So so if we look at this and we think about, I'm going to lose my train of thought here. What was I going to say?
Owner's equity, Trump.
Yeah.
You're saying we still got a lot of equity, a lot of owner's equity.
Yeah, I don't know. I lost it. I lost it. I can't remember what I was going to say.
Trump knows his shit. We don't know if it's going to last anymore, if it's going to blow up. He's got 6 million users. And then you were like, look, we still have a lot of owner's equity.
Yeah,
I lost. I do that all the time, man. And I'll start talking into another conversation. Then you're like, oh, that was it. But then by the time I finish whatever I'm saying, you forgot it again. That's how I normally roll. But
yeah.
No, man, this was.
Oh, I know what it was. I got it.
I told you.
Okay, good. So what I was going to say is that, private equity is like a magic or not magic. It's a mysterious black hole, right? We know that Washington, D.C. is heavily connected to private equity, right? And you know what private equity is, right?
Update us in case somebody else doesn't.
Yeah, good. Okay, so essentially what it is it's so high net worth people, right, that are qualified eligible participants, which means, you either have so much money or you have so much earnings. You're now eligible to go into, they'll create a document, right? This convoluted, document that, that shows what they're going to invest in. So Carlyle Group would be a private equity group, or what's another big one that you would know? Anyway, what they do is they pool this money from a lot of wealthy people, and then they go in and they use their lobby, right? They use their ability to understand, probably working with Nancy Pelosi, right? Getting the inside scoop. And so they know how to front run. They know how to front run opportunities. So they'll go in there with this private equity and they'll buy stuff up on the cheap, or they'll even, and sometimes I even think they force the price down. So for instance, Ukraine, right? They go in there, tear the heck out of the place, and then they go in with private equity, buy it up, you know what I mean, on the cheap, turn around, make a bunch of money. And what do? Then they turn around and sell it off to the public market, right? So they
Mhm.
sell it to the, in the stock market, right? So that's typically how private equities work. Well, there's also a component there that's called carried interest. So what these guys are able to do from a tax perspective is they're able to never pay taxes on stuff. They're able to call what's carried interest. So they're allowed to take their stake. So let's say they're making a 20% fee, right? So they have, let's say, $1 trillion under management. They make $200 billion that year. Let's say they make $1 trillion in a year or something, or let's just say they make 100 million to keep the numbers more easy. So
Yep.
they make $100 million, right? They get to keep $20 million for themselves. Well, they roll that back into their private equity fund and they don't pay any taxes on it because it's carried interest, right? So what happens is there's like $25 trillion floating around, 20 to $25 trillion of carried interest that's floating around in the system. And
No
don't think
way.
these people, and it's crooked, right? A lot of this is crooked money, right? A lot of it's dirty, just like we were talking about before, the
Yep.
running kids, running weapons, running drugs, running
Yep.
bioweapons labs, running money through this, Vatican Bank, this, whatever,
Yep.
the sky's the limit, right? So don't think Trump doesn't know all that. And that's why I think they're afraid of him, is that we could basically go in and say, you know what? We think all that 23 trillion was nefariously earned because, hey, wait a minute, weren't you going to take everything from us, the people? So you know what? We're going to take everything from you. And now you can write a little, here's your form to fill it out to get your money back. You know what I mean? Like,
Yep.
right.
Prove
You
every
have,
penny. Yep.
$40 billion in here. Well, sorry, how's 20 million sound? You can still live fine on 20 million, but we're going to take the other. If you think you deserve more than that, then explain to us where you got that money, right?
Yeah.
I mean, it could be something like that where, can you imagine if we took $20 trillion back, or even 15 trillion, knocked our debt down to, from 35 to 20, we'd feel like we were floating. You know what I mean? Relatively speaking. What if we took it to 10 trillion, right? What if we then tariff China, you got to be careful because you don't want to destroy the global economy either. But you see what I mean? Like, I could go on for hours on this, but the
Well, what
point
if?
is,
Go ahead.
no, go ahead.
No, finish that. No, I want you to finish that.
Well, I mean, I guess the thing is, I've thought long and hard about, the dollar, and I've thought long and hard about, this whole situation that we're in. And I get it. Everyone wants to beat the dollar down, right? Because it feels good, right? But it's almost like that sentiment measure, right? Everybody's on one side of the boat. And just like, when we said, Bitcoin hit a high and everybody was piling in record day after record day into BlackRock ETFs,
Mhm.
and don't think BlackRock wasn't behind promoting, oh yeah, come on in, this is great, come
Oh,
on in. I
absolutely.
mean, Larry Fink's just sitting there laughing, you know what I mean? Laughing the whole
Mhm.
time, probably selling into it, right? He's probably selling his own interest right into that whole thing. So the point is that, there's a lot of thought that needs to go into the dollar and the value of the people, right? And I always say a currency is the value of the people within a specified space, right? Their culture, their work ethic, the assets, the future assets there, the future productivity. I mean, look, this is a pretty productive place, and it could, and look, that's what Trump wants to do, is get everybody out and working again, get them jobs, feeling good, innovating.
Mhm.
Adam Smith, Invisible Hand, right? All these kinds of things. And again, you know, you got to be careful because capitalism can run wild, but I mean, there's so many people with so many good ideas that are just getting shut down all the time, right? I mean, we know there's different forms of energy. We know we could go on for hours on this, but I just like to paint the picture to the listeners, that there's, don't count the dollar out yet, right?
No,
And at least until technically, right? Until it gets below, what is that, $95 or something, until it gets below the apex on November. If it's below
yep.
95, I'm going to be saying on Market Ultra, and I'll be saying on your show, or who, wherever I'm at, I'll be saying like, okay, I get it. The dollar looks bad. I mean, I'll be the
Yeah.
first to admit it, but right now I just don't see that. I just
No,
don't
I,
see it.
I, I agree. I think you're spot on your analysis, 100%. I don't think that shorting the dollar right now is the play at all. I'm just saying in general, like all of our problems revolve around their ability to print money, right? And Thomas Jefferson said it best, right? Bankers are more dangerous than standing armies, and if you ever let a company or a
Exactly.
corporation control the wealth of your nation, your children will wake up homeless on the streets that their founding fathers fought to conquer. And that power should be taken away from those people and returned back to the people for whom which it belongs, right? So until we completely you eradicate that dollar. And if it means going into a Great Depression for the next 10 years, worse than anything we've ever seen before, well, then we just need to do that because our children cannot afford to pay $890,000 for a house. It doesn't matter what Trump does. It doesn't matter what any of these assholes do. And like right here, can you pull this one up on your chart? So this tweeted out 29 minutes ago. It says Nancy Pelosi is now up 10,527% on her NILA calls that she purchased on 3/12/2024. Strike price at 14 cents. Expiration date 3/31/24. Is that true? Did that just happen?
I don't know. I'm not sure, but I shut my news wire down.
Oh, okay. No worries. No worries.
Remember how it was interfering before we got on.
Yep.
So I don't know. It's possible. And, look, I agree with everything you said. The other thing, though, to keep in mind is that, the dollar going down is inflationary, right? The dollar going up is deflationary, right? Because if the dollar goes up, that means gold goes down, crude oil goes down, grain prices go down, everything goes down. And who's that good for? It gives the common everyday person the ability to, so with their hour of labor of work, they're able to purchase more of these things that they need, right? So goods are deflationary, and that's good for the people. So the dollar going up is deflationary for the US, right? Not for the rest of the world.
What about for Bitcoin holders?
Well, it depends. Like, that's the thing. We don't know. So what I'm looking for is the first, because again, everything's changing, right? Now we see Bitcoin is now, has the ETF wrapper, as they say. So the dynamics have changed. When we see, typically when the stock market's gotten crushed, crypto is also taking a hit with it, so can it hold up with the next stock market downturn? That would be a big break in the correlation. And then we could say, now we have a real asset that's different, than the stock. It's not just a speculative asset. That's what we're looking for, right? Is to see it diverge from the stock market, because we know right now the stock market is being held up by Treasury in the Federal Reserve, right? There's no reason for this. I mean, they come out and they say 8 rate cuts by March, and now they're saying 2 to 3 rate cuts by June, maybe, right? And the market's still on its highs. I mean, it's totally absurd, right? Anybody who's thinking, who gets it, is saying this is horseshit, right? This is total horseshit. And maybe it's AI, maybe that's part of it, but it's like, come on, like, there's no blip. I mean, it's right. So, I mean, that's what I'd look for, though, in Bitcoin and the crypto. If I'd want to see any crypto, right, that goes up when the stock market goes down, that's one I want to watch,
Yep. Well, Craig, man, it was such an honor having you on the show. Tell everybody where they can follow you. I know I got your links down in the description. I also shared a link. It's at the very, very top of the Rumble description. I think it should be up there as YouTube as well. That was to your guys' show today on Market Ultra, so they could swing over to LFATV, follow you guys on LFATV in the morning. What else are you doing? Are you going to be picking up on your Twitter? I'm hoping that Craig will get us some Bitcoin charts out maybe like once a week, like a 5-minute video, and kind of give us an overall idea of where he thinks the market's headed on Bitcoin, and we can promote him over in our shows as well. But what's your plans for the future?
Yeah, so right now I'm just kind of coming out of my hole. Like, I don't really have I have a couple Twitter accounts, but I've only used it to complain a couple times, so I haven't really
shitposted
anything with it. So really the place to catch us is right now is on Market Ultra from 7 to 9 a.m. That's really the only place to get us, I would say. And then, hopefully I'll start doing some stuff on X and a couple other things. And that's probably the best place right now. And you're going to be on there tomorrow, so I'm excited to see your show. I'll have to catch the replay of it because we're going to
orange pill some people tomorrow. I got some Bitcoin maxis coming on, and we're going to talk about just probably completely different than the show you guys do. We're not going to be doing like the 5 hits or whatever. We're just going to be talking strictly about money, the Federal Reserve, currency, Bitcoin, and we'll see how the audience likes it, man. I'm excited. I got these guys are really, really smart, really educated so it's going to be a good show. We got 3 or 2 guys for sure, maybe a 4th coming with us, and they're both, really high IQ individuals. So it should be a really fun show. I'm excited about it. And I need to get to sleep now because I got to be up here in about 5 hours. So.
Okay. All right. Sounds good.
Muzz and everybody over in the chat says, thanks, Craig. Absolute genius. And they actually were asking where we could follow you. Yep. Showed them all those. And then over on Rumble, Rockabilly says, I tried to chart during the bull run, held Doge for 2 years. Now silver a bit. And he says something about when you said if they were following us over there, and Rockabilly said, yes, I have. And where will owners equity for the US go? Says damn lucky.
Well, again, I think that's that's the thing that's the hole in the bucket, right? Is owners' equity is that they're draining it, and so, when we see this climate scam, right, that's
Mhm.
tapping into it, right? They're doing anything they can to try to steal that from us, right?
Yeah, you owe nothing.
And yeah, you'll own nothing, right? And you'll be happy, right? And that's basically the same thing as saying we're stealing your owner's equity, right?
Yeah,
So
so
you're
the
not
owner's
that
equity is going into the elite's pocket, and you're going to rent it from them.
exactly, right? And it's just going to be nothing but liabilities to the rest of us, right? So that's their goal, right? And the beauty of that equation is, no matter how much you study accounting, it all funnels up into there. It's actually a pretty cool process for those who've done some accounting stuff. But the point is, that's a simple equation. I think Trump gets it. I think he's working, whether he knows it or not, or whether he describes it in this fashion or not. I mean, I think he's working off this framework, and that's what he wants to stop: is the people's owners' equity getting robbed from us. And that's the key, is turning this around. We just need to turn it around. Once we turn it around, I think we're off and running. But the key is, can we get them in there? Can we, can we
Oh yeah, if
survive?
we get them in there, it's it. I mean, it's over for them, and they know it. That's why I say it's like you're kidnapped and you're in the back of a car, you're tied up, you got in the mask, and the robber's got a mask on, right? Voice disguiser, like the whole 9 yards. You can't even see what color his skin is. Then all of a sudden he turns around, and at that point you're like, okay, cool. Like I can escape. He can just kick me out of the car. He can beat me, knock me out and drop me off in the side of an alley. There's a chance that I'm getting out of this car alive. Then he turns around, rips his mask off, freaking touches you, gives you his fingerprints, freaking pricks his blood, drops a little bit of blood on your skin, and then, writes down his social security, gives you his ID, his address, and everything that there is to know about this guy. Your probability of getting out of that car goes to probably about 0, right? You get out, he goes to prison for life or worse, right? And we're at that point in the United States. Like, the mask is off. We could see them. We for the first time, we were down at that Take Our Border Back convoy, right? And we were literally watching the fake news try to stage their fake protests, which we exposed. Like, in real time, we're exposing them doing like what they did on J6. But like, we're so ahead of it now, and there's so many people that are paying attention and watching, because if you're not paying attention, you kind of might gloss over it. But if you're sitting there looking at it, you're like, why is NBC News down here? They have nothing positive to say. And then you find out that they had basically flown out, commie influencers to like go into these events dressed as like a normal Trump supporter or Republican or whatever, and then the NBC will go and just interview that person. So it's not like they're going into a crowd. You're always wondering, like, where the hell did I didn't see that fucking person here? Where this person hates Trump? Why is he even at this event, right? But they somehow found that one person in the crowd so that they can go and do their 5-minute hit on MSNBC News and push out whatever narrative it is. And it's like, dude, it's all a fucking lie, and we're seeing it in real time. So I hope there's just enough people to fucking wake up and we can get Trump back in office, because if we don't, we're fucked. Like, our country's fucked, the dollar's fucked, your freedom's fucked. Like, we're fucked. So What a great way to end the show, I guess. Positive note. God bless you, Craig. I'll keep talking if I don't end this right now. So thank you, man. Everybody in the live chat sending out hearts and stuff. So we appreciate you big time. Make sure you guys swing over there and follow these guys in the morning, and I'll see you guys on LFATV at 7 a.m. God bless you, Craig.
All right. Thanks, Ryan. Good night.
All right. Catch you guys later. Man, I always forget to do that.
Run.